we think within 1 minute, somebody should understand ZKEX very quickly and be able to buy their first piece of crypto within 1 minute, no matter who they are.
Hello, everyone, and welcome to the 14th episode of Colors of Web3 Entrepreneurship. My name is Lam, your typical Web3 host, and here I am today with Balal Khan, who is the CMO, Chief Marketing Officer at ZKEX. I think, Balal, could you give us a quick introduction about yourself?
Hey, thank you so much, Lam, and hello, everyone. It's a real pleasure to be here. Super excited to talk about a little bit about my own journey and also about ZKEX. So my name is Balal from the UK. I've been in technology for most of my life, and I'm one of the co-founders now of ZKEX.com. And there's many ways to pronounce it, just how you just said ZKEX.com, but we say ZKEX.com, just to make it really clear how to spell the four letters in our domain. We're essentially building a decentralized crypto exchange, which hopefully will be the safest and most powerful in industry. And the really big problem we're solving is the fact that it's extremely hard and quite risky to trade on by yourself using your own wallet. And that's the reason why something like 80-90+% of people actually buy and sell and trade using centralized exchanges, like the very large, well-known ones that you know about. And the reason they do that is that it's very, very hard to actually trade crypto and actually hold it and be in a safe way without getting rugged or losing your money somehow. There's been billions of dollars of hacks and losses, and people are a little bit afraid to do it. They don't know how to do it as well. So there's problems with usability, problems with security. But most of all, when there's difficulty, people will always stay away from something. And there's also high cost as well. So when things are expensive, people will look for the cheaper option. So all of these drivers are pushing people towards centralized exchanges rather than decentralized ones. So we can go into a little bit of the differences between that and really about the problems which are existing in the industry. So we're coming to the end of 2023. It's a really exciting time in our industry, and it's still, I think most people are trading using centralized exchanges. And the premise, as we know, of all the listeners know, the premise of crypto is you should hold your own assets. You should be the bank. You should be the owner of all your assets. There's no middle person in crypto, but unfortunately, the majority of people are using middle people to manage their assets, to trade, and to hold their assets too, which is slightly ironic for what the ethos of crypto is supposed to be about.
Very interesting. Before we dive further into the startup, typically I'd like to get to know a bit more about the guests. So yeah, could you share with us your upbringing? Feel free to choose your timeline, whatever you think is appropriate. But actually, the timeline from when you think you began to form your character, right? Maybe from high school, college, up to you, and then leading up to your current role. Maybe share with us a bit about your professional work experience as well.
Yeah, I love this question. So I could talk for another 2 hours about my journey. I think it's a weird one, to be honest. I don't have a very typical founder startup story. So basically, I was a very good boy all my life. I followed the path that my mother and father set for me, which was to work hard at school and then go to a good university and then to graduate and then go to have a very good corporate level job and work diligently for a number of years. And in some ways, when I was younger, I was quite introverted, quite shy in my late teens and my early 20s. So to be honest, somebody telling me what to do in some ways wasn't too bad. And I kind of felt okay because I wasn't really sure what to do when I was very younger. But when I got to my mid-20s, I started thinking after you work for a corporate job, you realize that someone is pretty much in charge of your life. Again, for some people, that's totally okay. But when you do become older, you do discover your real personality. You kind of like lose the bubble which is around you that your parents wrap you in, and you become independent. And I realized very quickly that working for someone else in some ways is very nice, but also very suffocating and very limiting. And I'm the kind of person who has a lot of ideas, who sees problems and wants to solve them. And that was my first venture into entrepreneurship, is in my mid-20s, when I had a couple of friends who were very, very technical, and we decided, I thought, yeah, I'm a fairly technical person, so you guys, maybe we can come up with a software company of sorts. So we formed a company. This is back in the UK, by the way, and I would say there's moderate success, but without a doubt, we were very immature on the business side of things. So we were all, the biggest mistake I would say of that company was that we were all focused on the technology and about, what solution could we provide to our customers. But essentially, we were building apps, we were building software solutions, and we just didn't manage our bottom line very well. So we didn't make as much money as we thought we would, which led to, after
So
maybe a couple of years, a bit of loss of motivation, I would say, and we reevaluated.
what sort of company was this? Was this like a software provider type of service company?
Yeah, and even that was a discovery in itself, because it happened out that somebody asked us to build some software for them, a friend of a friend, and then we started building it, and we realized this is really fun. Someone's paying us. They trust us enough to actually build this software for them, and it was actually a fairly lucrative project. We realized that, hey, maybe if we take on more clients, we can make more and more and more money. So there was the initial success where we made a decent amount of money for one project, and it came to the idea that, hey, maybe we could do this as a living, just do this full time. So it essentially was an agency of sorts, software agency, where we'd build for other clients, or other agencies would outsource us. And then we got into the more of a problem of, when we actually built something for a software company, or for example, of maybe a backend system, maybe e-commerce system. Sometimes the client will come back to us and say, okay, you guys have built this software, then what do we do about the customers? How do we get customers now? And we've invested all this money into the software. And then we thought, we're not really sure. And then we started reading about it, and then I particularly was really interested. It fascinated me about, we've built something really cool, but there's no customers. No one's buying it, even though they should be. And I always had this idea that the correct way for business was, there's a really famous movie called Field of Dreams with Kevin Costner. And the tagline for that movie is called, "If you build it, they will come." Which, when this guy,
It's
he
not
built a
true,
baseball.
yeah.
It's not true, but in the movie,
Yeah.
he built a baseball field in the middle of the fields, in the middle of the countryside, and then suddenly people started arriving in cars. And it gives out the premise that there is pent up demand for something that maybe is your dream, and sometimes it does work out. But I would say for 95% of entrepreneurs, they assume that their idea or their kind of dream is definitely something that other people want, and when they actually deliver it to the market, they realize there was actually no demand. And that's why I think a lot of entrepreneurs fail, because they took the assumption that somebody out there wants what I want, and it turns out that actually you were the only one who wanted it, and there was actually no pent up demand. Instead, you actually need to drive demand. You need to do sales. And this is where a lot of entrepreneurs fail. Entrepreneurs usually are not very good in the sales side, on the marketing side. They're all only really good at ideation. So yeah, I would say that was our falling point too, because when we set up our agency, we assumed that we've got one project and maybe there's 1,000 others who want us too. But actually, when we quit our jobs and start doing it full time, we realize it's actually not that much work out there. You have to generate demand, you have to generate awareness, you have to generate, do sales. And because we're all technically focused, unfortunately, that was our weak point, managing clients, getting more business. So I think that was one side of the business. I would say after a few years, my co-founder at the time, he wanted to get married. And he said, we're working a lot and we're not making that much money. And I think he was being pressurized to get married by his family as well. So he says, I actually do want to get married. So actually he got married, and we're still friends to this day. I attended his wedding and everything, and he moved to the Middle East. And I was at a point where I was kind of suffering a little bit. I was still had the agency going. I was the only one. I was doing both client work. I was doing front end work, doing back end work, working with developers, doing the front and back end. And I got to say, as an entrepreneur, again, that's my second mistake. You cannot do everything. A very key part of success is being able to either outsource to people, your employees, but if they're not capable, then you need a co-founder of sorts to actually take care of and be very responsible So I was just stuck in the middle, trying to jump around and do everything. And I got to a point where it wore me down as well. I thought I'm doing a lot of work and no benefit. So I actually ended up moving to the Middle East as well. So that was my adventure. I was essentially living in Europe up to that point. Then I moved to the Middle East, to Qatar, and that opened me up to a new world altogether. That was a very amazing experience. So yeah, we can talk about that as well. Like there were essentially 3 phases of my life. So phase 1 was the UK and Europe. Phase 2 was the Middle East. The Middle East opened me up to something really interesting, where I was introduced to people with money and with power and with status. And somehow I'm in the UK, and I can say I'm just an average guy. Everyone in the UK is moderately, successful, middle class. The middle class is massive there. Everyone's doing good. Everyone's well educated. They're doing good jobs. No one's really suffering there. When I went to the Middle East, I realized that there's another strata of people that exist in the world, and somehow I accidentally got into that strata, and I started mixing with royal family members, with CEOs, with ambassadors, with entrepreneurs, people who were highly successful. I was still fairly young. I admit I wasn't. I can't say I was very successful myself, but I just got access to this world, and I realized this is how it should be when you're a founder, or say when you've become successful in quotes. And it changed my perception a lot about what it meant to be rich, to be honest, what it meant to be very successful and very powerful. And then I got a different mentality. I realized I'm not there yet, but maybe I could do it, because these guys are fairly normal, but they have done something. They have a certain discipline. They have a certain talent, which they've taken advantage, but they're just otherwise quite normal people. And a lot of rich people, surprisingly, aren't mega intelligent. I've always had that wrong perception as well, that highly successful people are also highly intelligent, when in fact some of my friends who went to Oxford and Cambridge and top tier universities when I was in my early 20s, I assumed, oh, that's how you become a millionaire. But actually they went into very mediocre jobs. They just pursued their passion in, say, academia or some field that didn't pay very well, but they're brilliant and amazing and very, very knowledgeable in that field. But that wasn't really a field that paid money per se. But they were very happy though. Like, we can never criticize people who follow their passions. And for some people, money is not that important. Power is not important. They just love something. So being exposed to that new world opened my eyes in a different way, and I realized that, you know what, I'm actually not that knowledgeable. I don't have as strong as network as what I thought I did. I'm not exposed to opportunities the way I want to. So the third phase of my life was at a point when I got offered a job to come to Asia, and China in particular. And I took that job with the view that I want to learn, expand my network, because China at the time was extremely strong. Everyone was predicting that China would take over the world. That was a few years ago. And I thought this is the right time to learn about Asia. I have no idea about Asia. I really didn't have any idea. I only traveled to a couple of places on vacation for a week maximum, but I had no idea, no network whatsoever. So that was the third phase of my life. I realized I will need to expose myself to this new expanding world, which I know nothing about. And I moved to China, Shanghai in particular, and got to travel all around Asia. I built up a huge network. And that's when everything clicked together, where my knowledge of technology.
Can you tell us what job this was?
Yes, that was my previous job.
Can you tell us what job this was?
Yeah, that was working in cloud computing in China, and I was in charge of marketing there. It was another corporate job, but I didn't mind because the hours were quite well scheduled. I have a lot of time in the evenings to pursue my passions. So I used that time to build up a network, and it actually worked out. What actually happened was I started following my passions outside of work, and I fell into doing buying and selling crypto, and in particular experimenting with mining Bitcoin back then. And when you start explore your passions that are maybe related to kind of making money or doing business, you do end up hanging out with other people and meeting friends who have similar passions. And then what happened in China is that crypto really took off at that time. This is I can say the year before DeFi summer. when amongst, particularly in Asia, crypto really, really took off. It was seen as a way to make a lot of money. I wasn't that smart to realize that it was so lucrative. I was only just experimenting at that time. But I did hang out with a lot of other people who were really deep into it, to the point where even one of my friends who was Chinese, he sold his house. He sold all his savings, which is very unusual for an Asian to do, because
That's crazy.
Asians typically have
Yeah.
a safety mentality. Don't risk your life on something wild. But he sold everything he did, and he just bought all these computers, GPUs, and set up this huge share in a mining farm, and he was mining Bitcoin. And I thought he was crazy. I actually purchased a property at that time in London. I thought this is a much better investment than your Bitcoin stuff, because it was flat. The price was flat at the time.
Yeah.
But amazingly, after a year, we had a boom. So he became a multimillionaire within a few years. And I was just my normal self, had my property in the UK, which didn't appreciate that much, certainly not in line with what Bitcoin was doing at the time. But no regrets. Everyone has to follow their own journey at the same time. So I took it as another learning experience, because I realized that maybe I'm not risky enough. I'm not taking a big enough risk. There are certain things in life when you think, okay, I'm going to take a risk. Maybe some people take risk with their lives, which I think is a bad idea. I think it's okay to risk your time and risk some of your money. Don't go wild with your money, but risk all the time you want on something, but don't risk your life. That's very silly. But that was the kind of risk I decided to take. Was I'm going to start risking more of my time and more of my money, and that's when I thought, okay, what is the industry right now which could expand very very fast over the next few years? And there were a few. Luckily, I think being in technology, you just kind of gives you a lot of opportunity to kind of like try different things. But definitely within technology field, I think crypto was a big one. And this is my journey into crypto essentially. And I was lucky enough to meet my co-founders in China. We know each other for quite a long time, and all of us thought we can do something better. And we all had a different skill set. I can say my other two co-founders are very different. All three of us are radically different. And so like that's essentially how we got together. We liked each other, we trusted each other. And then we decided, you can do this part, you can do that part, and I can do this part. And we realized this is a good partnership. We're covering all the bases here. And we thought all of us were in our 30s by then as well. We were mature enough to understand what a business looks like. I'd actually got a business degree by then. And also my other co-founders had master's degrees. So we had like that maturity, academic maturity. We had worked in real life as well. We'd all had run small businesses before as well. So we had that maturity to know, okay, if we do this, let's do it properly. They're really, really well structured. And we realized that we have an edge here in terms of technology, in terms of operating experience, in terms of really, truly understanding what people want. What do people want? And achieving, I think I mentioned that entrepreneurs always make the false assumption that if you build it, they'll come, but it's not that way. So we're essentially building our protocol now very much in line with what people want. So when we do finish building, which is quite soon, they hopefully are already there. They're already here with us, standing right next to us as we build it. So this is the intention now. So we don't pray and hope that people will come to ZKEX and start trading. They're already standing here and they're waiting for it to be we open the door and they can walk in and start trading, because they're helping us to build and construct. They can see the insides of ZKEX already. So yeah, this is the journey over the last number of years
Awesome.
to up to this point.
Wow.
Yeah.
That's
And now
very
we're at the end of 2023 into entering 24. Yeah, we've kind of essentially gone through the pain of the last 1 year of building, where a lot of doubt sets in, competition launches before you. And then we are in a point where like, okay, we've actually built a product. We've got a good community. All right, let's go live. Let's see what happens now. But at the same time, that's, you don't kind of hope and pray as I mentioned, but there is a part of that when you're excited for it to go live. And then we have a very comprehensive marketing kind of like rollout plan. So many things to talk about over the next 1 year about what we're planning. So yeah, that's a very brief intro of my life as a introvert, safe corporate guy, and slowly over the years becoming more and more aware of himself, becoming more extroverted, and then eventually becoming a co-founder at the very end of it. So yeah, let's see
Nice.
where the next chapter goes.
Yeah, I like that. So wait, the three of you, including the founder, did you meet each other in China? Was China the common factor that brought you guys together, or what was the thing that brought you guys together?
Yeah, everyone is Asian. I can say I'm of Asian background as well. So there was definitely that shared mutual respect and similar values in terms of how we live our lives. That's what got kind of bonded us without a doubt. So yeah, and I think Asians do bond together very well, I would say, because we do have that cultural familiarity with each other. When we mention something about your life, the other people understand it very quickly, and they can understand your struggles as well. So things like education is really important. Things like doing well for your family is really important. And there's the idea that entrepreneurship is a very honorable thing as well. Like the ability to create a business, but at the same time, I would say the difference here is that I think in China people are quite more risk taking than my own culture. My own culture is Pakistani in origin, and people don't like to take risks that much in Pakistan. So I think that was a place where I need to grow. I needed to grow myself. I need to grow myself out of my shell and to catch up to how other people are, how risky other people are. So I was always often in my life taking the safe choice. And when I thought about why I did this in my life, why I always take the safe choice, a lot of it was because of the influence from my culture and from my family when they encouraged us to become professionals. Like the typical kind of joke in South Asian families is if you're not a doctor or an engineer or a lawyer or an accountant, you're probably a failure. So that's why,
Very
for
typical.
example, yeah, it's for example, like in the UK, one example is there's no professional footballer who's of South Asian origin. Even in the Premier League, for example, there's a few minor ones, but there's no one famous. And is it because South Asians can't play football? That's not true, because I know growing up, there were some of the best footballers I know were South Asian, Indian or Pakistani, Bangladeshi origin or something like that. And they're just encouraged and pushed by their parents to drop sports as a profession and move into academia, move into like a professional career. So it's definitely, I realized that this culture is actually pushing us towards safety. And the reason that is because that our parents back then came from a place where their own countries were not very successful. They were a little bit unstable. So they themselves were moving towards stability. That's why there's been a lot of emigration into the West, but they're moving towards safety. That was a big reason why financial safety, political safety, things like that. So that's come down into us kids, the next generation who grew up there. We became more safe, a bit more risk averse, which is actually not good for entrepreneurship. Yeah, so I think a lot of people are kind of unshackling themselves, and there's a new generation of people who are more risk taking. I think my own journey was combined with my own personality. I was a very tall, skinny kid, very shy all the time. So like again, that naturally when you're shy, you do avoid, certain situations and certain scenarios. So I broke out of that for sure. Yeah.
Interesting. Yeah, I like how you evolve over time. Yeah, from like what you said, shy and introverted to now very outgoing. From what I perceived when we first met each other in Vietnam a couple of weeks ago. Yeah, to now very outgoing. Yeah, representing ZKEX. Before we dive into your startup, actually, I'd like to just get to know about your personal hobbies. Can you share with us like what do you do for fun outside of work?
This is an interesting thing. I've actually lost all my hobbies. When people say, "What do I like to do?" I don't know what I do anymore because I don't do anything really fun. But I think definitely as you become a little bit older, you kind of start doing things which you really love. And actually, I have to say right now, I have two sides of my personality. One is my introvert side, one is my extrovert side, and I have hobbies which indulge both. For example, my introvert side, I actually love reading. I'm a complete bookworm. I read. I'm just fascinated about a lot of subjects, and I will just do my own exploration and start reading about. I'll even read academic papers. I'll read books. I'll watch videos. When a certain topic catches my attention, I'll just deep dive into it. So that's the introvert side of me, and I'm quite happy to stay at home all weekend and never even open my mouth to a single person, and just indulge myself. And even I play video games. I remember as a kid, I used to play quite a lot. And even right now, when I'm a little bit bored, I might play a video game and completely rebalances my mind. Usually strategy games is my thing. I don't know why. I love to kind of like create something and execute it and see what happens. And in a game, it's like a safe place to do that. So that's my introvert side. My extrovert side, which developed definitely over the last 10 or 15 years, is that I've actually, over time, I do really miss talking to people, and going out at nighttime was a huge thing for me as well. Because when you're out at nighttime, it's very noisy, very fun, very enjoyable. And then I tend to forget about work. When you're talking to people and laughing and joking, I forget about work sometimes. So I would say both my pursuits are quite therapeutic, where I completely immerse myself into something, whether it's having a great conversation in a crowd of people, exploring certain places, or it's staying at home and just immersing myself into some weird random topic. So yeah, those are really my two big hobbies. I actually used to play I play all the sports imaginable at an amateur level. I would say, like, I'm not professional at anything, but yeah, I'm multi-talent. I would say not exactly a savant, but certainly not a savant, but I try my hand at pretty much everything. I never say no to something. I always try my best to learn something or to try something, whether it's an activity or a hobby. So I can do fairly well in almost any situation where I'm able to kind of, if something's happening, I can take part. So essentially, whether it's, playing a game, playing cards, playing a sport, or a social activity, like going there, someone and speaking to people, I can take part and almost put myself into any situation and be fairly comfortable, So it's just from years and years of trying different things and learning different things that I'm in this position. So yeah, I have definitely this multifaceted part of my life where I'd love to do lots of different things. I have this two-headed personality as well, introvert plus extrovert. I know there is the term ambivert, which is somewhere in the middle, and most people are ambiverts, but I've noticed I do swing at certain points one side or to another side. Right now, in these weeks, I'm definitely in introvert side. I've not really been talking to anyone recently, been mostly staying at home at nighttime. So right now it's Friday night right now, and I'm sitting quietly in my hotel, quite content, no FOMO that some other people are having fun. But yeah, it's I can love to have fun as well. So yeah, it's really I think this process also helped my entrepreneurship journey. When you try different things, you realize what you like and what you don't like. And in entrepreneurship, a big part of success, I think, in being actually having a business is in your business you have you try lots of things along the way as well, and then you essentially find a fit for your business as well. So definitely this experimental kind of attitude is very good in both in my personal life and also in work. It definitely works out too. I think it's the correct attitude to have when you have a business. So yeah, lots of different things. If you name something, Lam, let's go do this, I'm down for it. Yeah, so I'll hardly ever say no to anyone when they want to do something. So yeah, awesome. I was playing chess the other day with I think you saw me playing chess.
I remember saying
it was so much fun to play chess too. I was like, this chess is amazing. I won one game, I lost another one, but it's like it was great fun.
Yeah, and I think usually for like founders and entrepreneurs, to do there's a lot of experimentation, right? Until company find their own product market fit. So keeping an open mind, being willing to try new things, I think is a prerequisite to running a startup.
Without a doubt. I think I'm definitely over my fear of failure as well. When you do fail so many times over and over again, then you become a little bit immune to it. It's still painful when you do fail, but you're immune to it, and you realize that actually the small pains, the small failures definitely do push you in the right direction, and eventually you eliminate the wrong parts in your life, whether it's a personal thing or whether it's a professional thing. You realize that this is wrong, but this is right. So definitely, like, failure, when it comes to experimentation, basically means failure. You try something, it didn't really work out. But the level of failure is really important. I mentioned at the very beginning, people shouldn't risk their lives. And I know people who have risked their lives and risked all their money on something. This is very foolish. I've seen a lot of failures in my own life where people have gone down that route and they destroy themselves. They were having too much fun in their personal life, and they ruin themselves, or they put all their money into, say, a new business of theirs, and then they got wrecked and they lost all the money and they got divorced and they lost their house, and all these knock-on effects happened to them because this went in too much. So definitely failure needs to be moderated. You can never risk too much, even in your business as well. You can never risk too much in huge unknown bets. Small failures, small experimentation is the way.
It's true. Yeah, that's very good advice, actually, even for living our life in general. Well, without further ado, let's go ahead and dive into your current company. Please feel free to share your screen or any presentation that you have.
Yeah, for sure. Great. So I want to introduce officially ZKEX. Can you see my page? So it says private and confidential, but I'm going to show you a few pages to introduce our product so you understand what we are and what we're building it for. But essentially, we realize that the state of our industry is always in flux. And so we do see an opportunity in the next year or two to launch a decentralized crypto exchange, which essentially takes away the risk of trading and also makes it very easy to trade as well. So anyone can come and start trading by holding their own assets in their own wallet, but have all the power and all the kind of safety and all the good feeling and good usability that comes with using existing projects which are centralized at the moment. So essentially, we're building, in technical terms, an omni-chain order book DEX for a multi-chain world. And so the Web3 world right now is definitely multi-chain. A few years ago, we thought maybe Ethereum would be the super chain and that would kind of run everything. But we found that Ethereum, despite some fantastic innovation and amazing functionality, it's not anywhere as capable as it needs to be to run crypto or run Web3 or to run projects. So there's essentially been a push in two ways. One is to have Ethereum run almost like subchains, which are like L2s. L2s are like it's like partitioning Ethereum into smaller pieces to make each part work better and faster. So L2s are a huge kind of a new innovation where the layer 2 of the blockchain essentially opens up new blockchains. So you have Ethereum as like the mother blockchain, and you have these baby blockchains off of Ethereum, which are the L2s. And then now we have a concept called L3. So Ethereum will have a layer 3 of blockchain, which has introduced another blockchain. So we have a world where we have lots of blockchains now. And another area of growth is we call alternative blockchains, which essentially they're on a different system from Ethereum, and there's dozens of them as well. So there are lots of blockchains, which is very difficult for people to understand when they come into the industry, that why are there all these blockchains? And the simple fact is that no blockchain is in itself capable enough to handle the growth, because blockchains themselves are a very difficult technology to scale up and to kind of make fast because of the inherently of how it's constructed. There's no centralized kind of entity controlling these blockchains once they're launched. They're all kind of managing themselves. Like, think of it as a robot that lives indefinitely by itself, and it runs itself indefinitely. No human needs to come and tinker with the robot to make it work again. It's able to fix itself. That's what a blockchain is. It lives kind of independently of any centralized actor controlling it. So scaling these blockchains is very, very difficult, which is why we have this situation with so much fragmentation of both users and also of liquidity. And by liquidity, I mean assets are split across all these different blockchains. To give you a very simple example, I have my assets split across probably a dozen different blockchains at the moment. And the other day I was trying to move my assets from one chain to another chain, and I just couldn't really work out exactly how to do it. To be honest, it was a little bit difficult for me. Even though I have a computer science degree, I was having trouble trying to move my asset from one to another because it kept failing, and I couldn't work out how it's failing. And this was a very typical example of, even if a guy with a computer science degree can't manage his his digital assets very easily, then how would someone who's maybe a retail person or just a simple normal person be able to do it? And this is the state of the industry we're in right now in 2023, where you can only really play in the blockchain world and the Web3 world if you're inherently technical. And we think this is wrong. So when you go and speak to, say, your normal friends, maybe they're not into crypto or not into Web3, your normal friends, if you ask them, have you heard about Bitcoin or Ethereum? 9 times out of 10, they've heard about Bitcoin and other things. And if you ask them, how would you buy it? They wouldn't say that, oh, I would get my own wallet and set it up and then start buying from this exchange, whatever. Or they would actually say, I'm going to go to a famous kind of like a crypto company like Coinbase or Binance or OKX and whatever, and just open an account and buy it there. So actually what they're doing there is when you have buying and selling crypto from a centralized exchange, you're essentially handing over your money to the exchange, and then they just give you, they just tell you they've got the crypto for you, they're holding it for you. But I think actually whether or not that they've actually got it or not is, for you, it's a black box. You have no idea what the centralized exchange is doing. And it's very similar to how in banking, how we have fractional reserves, where essentially the bank only really holds about 10 to 20% of the assets which it's supposed to be holding. What they take is, when we deposit our money into the bank, they take that money and they put it somewhere else, put it to work somewhere else to make more money from it. And crypto exchanges have been guilty of this as well in the past. And so we've had some pretty major cases where crypto exchanges have gone bust because they took the customer's assets and they put it to work somewhere else, and they lost that money, and suddenly they've become insolvent, and they never told anyone for a while, and eventually they caught out, and all the customers lost all their money to the tune of billions. So it caused a lot of uncertainty. So it came back to that premise of essentially crypto is all about holding your own money. But then how do you trade it though? Like, for example, if you're in one country right now, I'm in another. If you and I want to, say, swap, or we want to trade, say maybe you've got some asset that I want to buy and you want to swap it with something I have, how do we do it? We're not supposed to be using a middle party, right? We're supposed to do it peer-to-peer. So the solution now is that decentralized exchanges are essentially software where users go to these marketplaces and they can trade peer-to-peer without having a middle party. But then when you actually use a software, you want to be sure that the software is actually secure as well. Because what if something happens in the middle? What if the software is not secure? And this is a new problem we found, is that when you're trading in a decentralized avenue, because of the way the software is constructed, it may not be that secure. And we've had a lot of losses, particularly even in the last few weeks, where these exchanges get drained of all their assets because of the way they're constructed, or the people who are trading on them didn't realize, but they drained all their wallets by accident, and all the money got lost. So even not only is the centralized exchange idea not secure, even though it's fairly easy to use, it's not secure by default. It's against the premise of crypto by owning your own asset. But even the decentralized exchanges, we found, have a lot of problems as well. So we want to build a neo exchange, something that combines the benefits of the centralized exchanges, which is the ease of use, the simplicity, the ability to buy and sell very easily, and have very powerful functionality for trading if you have a certain strategy in mind. There's different ways to trade crypto, different mentalities to trade crypto. We want to have all the tools that people want. At the same time, we also want to make it so that people are not actually depositing money onto the exchange. They're just trading it from their wallet directly, doing a peer-to-peer with someone else. So how do you combine these two things? Because no one's really done it. So we have a very unique model where we're building what we believe is, the safest, most powerful crypto exchange in the industry. And we're quite happy that we are on the verge now. We've been building this for about 2 years, or 1.5 years approximately. And we're now on the verge. We built the product and we're going to launch very, very soon. So end of 2023, early 2024. We're about ready to launch now. And let me introduce the product. And
Sure. Can I quickly clarify some terms here just for the viewers? Can you go back to the previous slide? So DEX is what stands for decentralized exchange, and also can you explain what the CLOB mean, and also omni-chain and multi-chain?
Right.
What's the difference? Yeah.
Oh yeah, so
That's like,
these are some technical terms that we use. So essentially, a DEX is a decentralized exchange, and so the difference between CEX, which is centralized exchange, and decentralized is that a DEX is essentially just a piece of software that you connect to and you're able to trade. And there's another person or other people also connected to that same software, and you're able to essentially exchange person to person on that software. A centralized exchange, on the other hand, is a bit like a bank, where when you deposit your money onto the exchange and you trade, you're actually trading with the bank. So it's a different mentality, and you just trust that the bank is honest. You trust that the CX is honest, and they really are buying and selling on your behalf. And but you yourself are not actually owning the asset. You're just trusting that the CEX is doing it on your behalf. On a DEX, a decentralized exchange, you actually are the owner of the asset at all time. So whenever you buy and sell, you are always the owner of the custodian of your asset. So that's what a centralized exchange is. That's what a decentralized is. And then in omni-chain refers to something, the idea of being able to access all the different blockchains at the same time without needing to worry about what the pros and cons are of each blockchain. This app allows you to connect to all of them. And we actually connect to 13 different blockchains at the moment. And the CLOB here refers to central limit order book, but that refers to essentially there's two kinds of DEXs out there in the world. There's two kinds of software, you can say. One software is an order book based. Order books are the classic way of how people trade for the last number of decades in TradFi, in the traditional financial industry. This is how people have been trading. An order book basically is just a list of orders from people. Some people want to buy and some people want to sell. So you can think of it a little bit like an auction, when the software essentially in an order book matches buyers with sellers. So if I want to sell, say, something for like $1, and then there's no one in the industry who wants to buy that thing, that, let's say I've got an apple for $1. No one wants to buy it for a dollar. I'm going to reduce my price down to 90 cents, let's say. And then let's say you actually have placed an order, say, I want to buy an apple for 90 cents. So in the first case, we didn't match up because our pricing was different. But suddenly, when I reduced my price to 90 cents, it matches automatically with you because you want to buy for 90 cents. So this establishes a price in the industry of like, okay, apples are worth 90 cents because these people buying and selling at 90 cents. And over time, it establishes a price for that asset when lots and lots of people are buying and selling at that middle point of all the buyers. So that's why you see, you can see in the screenshot, there's these red, on the right-hand side, you can see these red prices and these green prices, and you have a price in the middle. So this is where you have the buyers and the sellers. We call them makers and takers in our order book. This is when you essentially place an order, say, I want to buy 5,000 Ethereum for $1 each. What's my chances of being matched? That if it's a ridiculously low price, no one's going to match my order. But the more and more you increase your price to a realistic price, then it's more likely to get matched with someone else. So it's essentially an order book is a marketplace for buyers and sellers to actually conduct. So this is a traditional way for years and years and years. It's essentially like a barter system. I have apples, you have oranges. Like, hey, Lam, how about I give you like 5 apples for 2 oranges or something? Let's say oranges were really expensive, so I'll give you 5
sounds
apples.
fair enough. Very fair to me.
Yeah. Send me the oranges when you've got when after this podcast. But essentially, the barter system is the classic way of how humans have traded for years, and the order book is a way to create a marketplace to have fairness in the marketplace, to where you have orders. So this CLOB central limit order book, the order book model is the classic way. Now, the interesting thing is, in the DEX world, there's a second model as well called an AMM. The AMMs is called an automatic market maker, where essentially you imagine you go to let's say you have oranges and I have apples. So in an order book, we'd be trading with each other directly. We'd be making our deals, and if it worked out that we have the right pricing, our order would be executed essentially. If we both felt comfortable that the pricing was fair according to the market condition. In an AMM, which is a different kind of decentralized exchange, a different model. Imagine you go to the marketplace, I go to the marketplace, and there's a huge pile of apples and a huge piles of oranges. And then when you deposit your apples or your and my apples and your oranges into the pile, someone tells you, hey, the price of the apples right now is this much and the price of oranges is that much because of the number of apples and number of oranges we've got in this big pile. And so if you want to buy and sell your oranges, you wouldn't be selling it, doing it peer to peer, like person to person. You wouldn't come to me. You'd go to the pile and do an exchange there. And when you go to, say, the pile, big pile of apples, you think, okay, I've got these 2 oranges. How many apples can I get? And right now they'll say, okay, you can get 5, or if that was the market price at the time. So it's essentially you're trading against a big pool, call it a liquidity pool of an asset. So in this case, we call oranges and apples. So this is an AMM DEX. So there's 2 kinds of DEXs out there in the world, which we'll see. Both have pros and cons. CLOB DEXs have pros and cons. AMMs have pros and cons. But what we believe is that in the crypto industry, in the decentralized world, there hasn't been a really, really strong and powerful CLOB DEX, order book DEX yet. So we are of the mindset that order books are the natural way to trade for humans, and we want to make sure that we have the best order book exchange in the industry. And there's various technical reasons for this as well. The blockchain itself is one of the limiting factors of why order books cannot be built in the blockchain world, because blockchains, if we mentioned at the very beginning, they're very slow and very inefficient and are not scalable. So building an order book, imagine you're dealing with a very old man when it comes to trading, and every time you ask him a question, he takes 5 seconds to respond to any question. At that time, maybe you're in a marketplace and you realize that by the time he tells you the price and he executes the order, that price actually moved on because there's another trader right next to him who's buying and selling very, very quickly. So scalability is really important, and speed is really important in trading. And so if you have underlying technology, these blockchains which are very slow and not scalable, then you have backlogs. So you can't run an order book very well. So that's why people have invented this new order book called AMM, having these big pools of liquidity of assets where you can trade against. We personally think that there's pros and cons to this model. So yeah, we can go into a little bit more detail about that. The last word is zero knowledge proofs. Yeah. So zero knowledge proofs essentially is our secret sauce of how we keep our users secure. And to give you a very brief analogy of what ZK proofs are, imagine being able to prove something without needing to actually show the data or show the actual information behind it. But you can trust that what I say is true. For example, if I go to a nightclub and I'm able to prove to the person that I'm over 18, but I don't need to show him my ID, because when he sees my ID, he has my name, has my address, has my date of birth. All that guy really cares about, all the bouncer cares about, is whether or not I'm over 18. He doesn't really need to see all the data. But imagine a zero knowledge proof is essentially like a seal, a stamp, where I'm able to essentially prove that I'm 18 to the bouncer without him or her actually needing to see my ID. So it's kind of like a magical kind of concept where you can prove something without showing anything. It's kind of weird. That's why the zero knowledge comes in, where you're not actually showing any information, but you're able to prove something. So this is a form of encryption, a new form of encryption. And the second part of this zero knowledge proof is that these proofs are very small. So to give an analogy, rather than having my original birth certificate and photographs of me growing up as a kid to prove who I am as a person, zero knowledge proof allows me to kind of like have a really, really small proof that proves who I am very, very quickly to someone. So in the context of the crypto world, crypto trading, what we do here is that we use these zero knowledge proofs to essentially lock a transaction to the user. So the user is essentially, his or her assets are locked. And then when you trade from each other, for example, let's say you and me are trading, rather than having a middle party, an escrow service almost, being in the middle person maybe receive the apples, receive the oranges, and then do the swap. Zero knowledge proof essentially proves to somebody else that you actually have those assets ready to trade. And then only when the exchange is done, then the swap happens at that point. But essentially, everything is locked up to the point of the exchange. When the exchange happens, then things are unlocked and released. So you need software to do this. So the software essentially allows you to have absolute securities, acts like an escrow service. It acts a little bit like a middle party, but it's not a thing or a person. It's just software. And it allows you essentially, you and me, to trade. So even if you were sitting on the other side of the world and I can't see you and I can't see your assets, but you send me a zero knowledge proof saying, I really do have 2 oranges ready for you, that are ready for you to trade. So you might be lying to me if I called you and say, Lam, I have 5 apples. I want to buy you 2 oranges. And you're like, yeah, sure. I have my 2 oranges ready. And I send my 5 apples to you, and I sit waiting for my 2 oranges and never arrived. And because you never had them in the first place, you just stole my apples. This is a really quick analogy of what happens in crypto right now, is that when the middle party, or you have no trust in the other person steals your crypto. Essentially, it happens all the time. And sometimes in the middle party, let's say you and me, Lam, we both have a friend, and we agree, I'll send my apples to the friend, and you send your oranges to the friend, and he will check them, make sure that everything's there, and then he will send it to us individually. So we trust that middle party is a trustworthy person. But what if that person ends up being a thief, and he steals your oranges and steals my apples, and he runs away? So that also happens in the crypto world too. So instead, what we're doing now is zero knowledge proof allows us to have like a stamp that guarantees that I've got my 5 apples ready, you have your 2 oranges ready, and when the trade executes, then that proof, which is an unbreakable proof, by the way, it's unbreakable. It really truly proves that when we do the exchange, you really did have 2 oranges, I had 5 apples, and the exchange happens, and it unlocks essentially. And then only we have access to those assets. No third party can jump in and try to steal it. That's one important thing. And even you can't steal my apples either, and I can't steal your oranges. So it removes any kind of complexity of managing your assets. You can have complete peace of mind that I will not lose my assets if I use this technology. And a side benefit of zero-knowledge proofs is that, like I mentioned, that a proof is very small. It allows us to roll up these transactions and bundle them together to save space, which makes the blockchains more faster and more efficient and more scalable. That's a kind of like an accident, a side effect of using zero knowledge proofs. It essentially allows us to bundle more transactions into the same packet, into the same kind of block, as it were. So it makes it more faster and more scalable, essentially. So you can put more transactions into the same piece of software. So yeah, this is the benefits of zero-knowledge proof. So you essentially have a really strong foundation where it's completely secure. You have complete peace of mind. And then on top of this very strong foundation, have incredible functionality that is more akin to the natural way of trading and have very powerful functionality. So this is the big vision of ZKEX, is really to challenge both the centralized exchanges and the other existing decentralized exchanges to build an exchange that has no compromise whatsoever. That way you are able to trade your own way without having any risk. The only risk you have is your trading risk. You know, if you're a good trader, you will make money. If you buy and sell at the right time, that's up to the user. But you shouldn't need to worry about where you're trading, how you're trading. You know, you shouldn't be limited. We don't believe kind of advocates of personal freedom in a responsible way. So this is the big vision of ZKEX. So I can go into more detail. Yeah, I can go through my deck a little bit to explain how we're special. So I mentioned very, very briefly about things like words like liquidity, functionality. So essentially, the complicated experiences I'm talking about is the fact that you have to create your own wallet with a seed phrase and manage it carefully, because if I lost my seed phrase or my password, then I'll lose my assets. There's a lot of cases where people have a lot of famous cases in the news when people have, say, lost all of their Bitcoin because they threw their hardware wallet into the trash by accident, or it was the pass seed phrase was on the computer and the computer broke somehow and they can't get access to their assets. So the wallet experience now has improved a lot, but it's still not very good. So we are looking at this area as well. And the fragmental liquidity part I mentioned was essentially, imagine that our apples and our oranges that we're trading are all split across different blockchains.
Yeah.
So it means that instead of, for example, if I tell you, hey, Lam, I've got 100 apples in my warehouse, actually my warehouse is split across all these different blockchains. And think of a blockchain as like a country. So I've got 5 apples in America. I've got 10 apples in the UK. I've got 17 apples in maybe in Singapore. And then you tell me, you come to me and say, hey, I want to buy 20 apples. And I look at my warehouse and I think, wait, I don't have 20 apples in any one warehouse. All my apples are split across all these different warehouses in these different countries. How can I give Lam all the 20 apples he wants? So the maximum I've got is like 17 in Singapore or 10 in the UK. I've got a problem, right? So this is what we call fragmental liquidity. And it's a fact that we have all these so many blockchains now, and all the money, all the assets are split across. It's really hard to like make trades and move things around. So we are essentially going to solve this problem as well. And the functionality I mentioned is about you as a trader. There are many different kinds of traders. For example, there's like a hodler. Hodler is essentially who buys and just holds indefinitely. They take a very long-term view. That's one form of trading, quite valid. Another kind of trader is a swing trader, where they kind of look at the movement in the market. They'll buy and sell at certain points. Then you have like degens. Degens essentially go for a certain kind of they like to do leverage trading, where they see a lot of potential in a certain kind of certain asset that they think might go up or might go down, and they willing to make a bet to even add more leverage to make even more money or lose more money. So that's a certain kind of high risk trader called a degen trader. So there's that kind of trader, and there's other kinds as well. But essentially, everyone has their own style of trading. Everyone has their own risk appetite when it comes to trading, and everyone wants to have certain precautions in, and you want to build in strategy into your trading as well. So, for example, you may put in a request to like buy at a certain price or sell at a certain price. So all this functionality becomes the more advanced you become as a trader, the more functionality you demand from the exchange. And if functionality is missing, then it affects your ability to trade properly in the way that you feel comfortable. So what we see in the marketplace is a lot of limited functionality of all these exchanges, and we don't want any compromise. So like I mentioned in this second line, that crypto traders end up having no option. They have no perfect option, so they end up going back to a CEX, when actually that's inherently a risk. But people are willing to take the risk in exchange for getting functionality, for getting liquidity, for simplifying their experience of trading. But again, that's a compromise in itself. You're taking a risk with your assets. So everything is a compromise. Everything is a compromise. And then why do we always have to make compromises in our lives? And why do crypto traders have to make compromises with their trading? So we essentially want to eliminate this. The specific problems I mentioned was that in a decentralized world, the wallet experience is very, very difficult. Very high barrier to entry. For example, would your mother be comfortable using MetaMask?
No,
highly
sure
unlikely.
not, yeah.
Or some other wallet. Maybe she'd be okay with opening a Binance account or a CX account, where it's kind of simple. Enter your name, your date of birth, and create an account, username and password. People are okay with this, but they're not okay with like decentralized having a wallet, essentially your own wallet. The second one thing is that other DEXs, they don't trade across different blockchains. So usually you'll have, say, an Arbitrum DEX or an Ethereum DEX or a Polygon DEX that only has access to the liquidity and the uses in that particular blockchain. So just how I mentioned earlier, that if you asked me for 20 apples, but I didn't have 20 apples on one blockchain, I had them split across different blockchains, we inherently have a problem with liquidity now, because I can't supply to you the assets that you want. I've got to like move stuff very manually in a very manual process. So all of these layer 1 blockchains, all these layer 2 blockchains, all the layer 3 blockchains creates more fragmentation of more users, more liquidity. Assets are stuck on all these silos, and there's no way to access them as an aggregate, which is more efficient. If I had all my apples in one warehouse, it's way more efficient. I can handle any order I want. But right now, if I have them split across, I can only take like little orders on certain, that can handle each warehouse can handle only small trades, not aggregate. So it just causes problems. And maybe if I want to sell them as well, but now I'm going to sell them individually instead of having one order to sell. I have like 10 of them. It's just a nightmare. And the third area where the problem is, like I mentioned, was AMMs. AMM is the idea of having a large pool of assets that you trade against. They're not an order book. It's not peer-to-peer. You trade against a big pool of assets. This inherently has some problems, new problems that we never thought about, where if you supply assets into that pool, then there's something called permanent loss, where if the price changes, you may lose some percentage of your assets. And another problem is that another problem called slippage is when you have, say, a pool of assets. Imagine a swimming pool full of water. If the water is very low, you can't swim there essentially. But if it's full of water, you can swim there. So essentially, in a trading context, when liquidity is low, then it becomes very unpredictable whether or not your trade will go through, because there's not enough liquid assets there for you to trade against. So the price will be very unpredictable. So you may say, hey, I want to buy this. You have your oranges and you want to buy some apples, but actually there's not that many apples in the bucket essentially for you to trade against. So, but you don't know that until you actually make your trade. And then suddenly you think, oh, I'm going to be buying 5 apples for 3, for 2 oranges. But then suddenly somebody else made a quick trade right before you and took a whole bunch of apples out. And now suddenly there's only a few apples. The price suddenly rockets up. And then suddenly you only get back 1 apple. And you think, hold on, I was about to buy 5 apples when I placed my trade. And in the middle, something happened and I only got 1 back. I feel like I got ripped off. But actually, it's basically that's called slippage, where essentially the liquidity, lack of liquidity, or kind of change the price in real time. So you have no like risk, risk. So you have no very hard for you to manage your risk as a trader when you have this kind of volatility. And the third thing is the lack of pro features. Like I mentioned, the AMMs, they are lacking a lot of features. Each AMM is usually built for one kind of trader. So if you are a degen, you go to this particular DEX or this exchange, or if you're like a hodler, you go to another kind of exchange. There's no DEX at the moment which caters for every scenario, every mentality of trading, every kind of trader, because of lack of functionality. It's a problem with software, essentially, a problem with technology, that the current models cannot handle all these different scenarios. So like I mentioned, people compromise and go to CEX, but even CEX is the big problem is the ethos in crypto is not your keys, not your coins. But actually with a CEX, we give them both. We give them both the keys to the crypto and also the coins. They hold everything. All you have is just a note on a piece of paper that they owe you this money, essentially. But you trust them. You trust and hope and pray that the CX is honest. But that's all you can do. So these are the big problems. And like I mentioned at the very top, billions of dollars of losses, hundreds of millions of dollars of losses every month, billions per year. It's just we have the idea that crypto will die, Web3 will die if we don't solve this big problem, because there's enough pain has been caused, where enough wounds have been inflicted, where people's mentality now of crypto is one of risk. If we tell our friends and family that we work in Web3, work in crypto and on blockchain, they automatically think high risk. You're crazy. I don't want to lose my money. There's enough news stories out there where people's mentality has changed because of the risk-taking element of what we're doing. And eliminating risk now is very, very important for actually people to restore confidence in our industry. So this is the big problem we're solving, is the lack of is the long-term harm and also the short-term harm that people are suffering on a daily basis, but also the industry is suffering. So we have to fix it. And so when we looked at this problem, we realized, number one, security is a massive threat. And naturally, we realize that DEXs are growing in popularity because of this kind of risk. But each DEX, we can say, has a compromise, is limited in functionality. But still, we see a massive opportunity that I think last year, 2022, user fees were around 2 billion per year. And by 2025, it's very much predicted that it will go up to 8 billion, or it's 4x in market opportunity in just 3 years. Quite decent. But we even see an even bigger opportunity where essentially we have a new space being carved out, where currently you have three kinds of exchanges. One is a kind of unregulated decentralized exchange, kind of a software such as Uniswap. Then on the right-hand side, you have a very regulated exchange called such as like Coinbase. And in the middle, you have all the other exchanges. Most are either unregulated or semi-regulated or offshore in some way. And they're all suffering right now. For example, you've seen market movements for certain CEXs at the moment where they lose market share because they get attacked by certain governments or certain regulators because they're very big, but there's no kind of nobody can control them. They just you just essentially trust certain CEXs that they're honest and decent, but no one can actually control them. So essentially, there's people in charge there. They are centralized exchanges. Literally, a person controls these exchanges, and you just hope and pray that the person is honest. And so, like, yeah, most of these exchanges are honest, but just the fact that, in general, you can never trust people. It's a fact of life. You should always verify that someone is trustworthy. Whenever you do business with someone, you don't assume certain things. Otherwise, you'd be taken like a fool. You have to verify when you work with people, even though you may trust the person, you still verify. It's just business. It's nothing personal. But in a CEX, you must trust them, and there's no verification that they truly do have your assets. So this is where people are being pushed left and right. Essentially, they're moving left towards the green area, the decentralized area, where they want to actually use software to trade rather than using an entity, or they don't really know how to use the software, so they go right and they go towards the regulated industries such as so essentially, users are being moved left and right. They either choose software or they use a centralized entity, a regulated entity. And so a lot of the exchanges are moving left and right. And we see a space where there's no decentralized equivalent of a CEX. So we want to build one of the first exchanges, which is essentially is software, but it has all of the benefits of being a peer-to-peer trading interface, but it also has all the functionality of a CEX as well. So it has not all of the pros and hopefully none of the cons of either the decentralized exchanges or the centralized exchanges. So we think there's a new space opening up, and actually our thesis is playing out to be correct. We took this bet around one and a half years ago. We thought this is where the industry is moving. End of 2023, 18 months later, having built our product, we were absolutely correct. This is exactly where the market's moving. So we see a massive shift in users potentially coming over to the decentralized world if the product is there. Right now, there's been no product for them to come to, so they've stayed on the CEX world. This is the 90% of users that I'm talking about. The 95% of users will hopefully come over to the decentralized world once the product is there. They're only over in the CEX world right now because of product. So yeah, the question is that lots of other teams have different ideas and different ways to solve this problem. We're not the first one to solve this, to see this problem, but we believe we'll be one of the first to solve it because of the technology, the underlying technology. Like I mentioned like a few minutes ago about zero knowledge proofs, we are very unique in that there's two USPs to us, which I'll go through in our product in a second. The first thing is the fact that our product is incredibly powerful as a trading interface. That's the first USP. The second one is that the foundation is incredibly secure. So we use the zero knowledge proofs to access multiple chains in a very secure way. So you have access to assets across the entire crypto sphere without needing to move your assets manually. You have automatic access to a lot of liquidity across all the different places, and you can completely relax that when you're trading with ZKEX, it's locked. All your assets are locked with ZK proofs, zero knowledge proofs. And so no one can unbreak them or rug them. You're the one to be in control. So we believe essentially we can have something without any limitations, incredibly powerful, very simple, and without any risk. So this is a very unique combination of factors, something that looks good and tastes good, essentially, in the crypto world. So like the first thing is in terms of functionality. Traders need functionality. They need to execute their strategies in the way that they have thought about how they want to trade. So whether you're very risk averse or very risky or somewhere in the middle, what you need is functionality to support your trading method. So we have a complete full spectrum of products, and we have something called portfolio margin, which a lot of retail users might not know this, but portfolio margin essentially takes a very holistic view of all of your assets. So you may even have a strategy where if you see the market moving in a certain direction, you may open up one position on, say, let's say Ethereum is the asset which you're watching. You may think, okay, it's going to go up, but it might come down in certain conditions. So you can actually set up certain orders to execute at certain points where essentially if Ethereum goes up, it does certain things. So you may decide to buy more, or you may decide to sell at a certain price. And at the same time, you may even open up a similar position, but in the other direction. So you may decide to kind of hedge your bets, essentially. So if the price goes up or down, you won't be heavily affected. Essentially, you will have it's called something called a delta neutral strategy, where you can limit your exposure to one side of the market. So if there's volatility going in a certain direction and you were not ready for it, you have positions open on both sides to manage that. So if the price goes up, you'll make money in a certain trade, but you have another trade open at the same time that might be losing money, but overall you're still making money. So it's a way essentially of you can risk more of your assets in a safe way if you know what you're doing, if you know how to implement portfolio margin strategy. And so normal retail uses this buy and sell an asset. We call this an isolated kind of isolated margin. But if you have cross margin, it's when you have multiple exposures to the same asset in different directions. And this essentially makes it for pro traders, when you're dealing with millions of dollars, you want to limit your potential losses and your risk as much as possible, because you don't want to take a risky bet and then you lose all the money suddenly. So pro traders actually do this a lot when they use portfolio margin. And so we'll be one of the first in the decentralized world to have portfolio margin. All the major CEXs have this, and this is why they're having 90% of all of the volume in the crypto industry, is that people are essentially using their portfolio margin feature to do huge trading, but essentially limit their risk. And it makes it essentially, you can manage your capital more efficiently as well, because actually you can deploy more of your capital into the market if there's better risk control. So yeah, this is a killer feature. So we'll have like a spot trading, we'll have derivatives as well in the form of perpetual contracts. And in the future we have an earn product which earns you yield in a very low risk way. So we have a lot of ideas here. So then the second most important thing is that pro traders need functionality. What do most average normie users need? They need really usability. So essentially, we have embedded a wallet. You can connect with your own wallet if you have one, like MetaMask and Ledger and other popular wallets. But if you didn't have a wallet, we even create one for you through the user interface. And this has a social login, so you can kind of essentially manage your wallet using your username and password and your mobile phone and things like that to have two-factor authentication. So you can have a very simple user experience. And it's not our wallet. It's created for you, but you still have ownership over that wallet. But it's easy for you to log in. So you can even use that wallet in different other venues as well. Other Web3 projects this wallet can follow you essentially. So yeah, we have basically a really simple onboarding experience. We have a really good user interface where we're very critical with ourselves and to make sure that anyone potentially can use ZKEX within a minute. That's our kind of benchmark internally, that we think within 1 minute, somebody should understand ZKEX very quickly and be able to buy their first a piece of crypto within 1 minute, no matter who they are. No matter who they are, they can come in and buy within a few seconds. So that's our benchmark. And having a domain name like CKEX.com is quite friendly for users.
Yeah. So regarding the social login over there, when they created the wallet, what is the underlying wallet? Is there some wallet underneath it that they are creating?
Essentially
it's non-custodial, right?
It's non-custodial. So we're actually using we're using another protocol, and so essentially it's a wallet service which creates a wallet for you, and then you have access. That wallet lives on chain essentially once it's created, and you have access using your social login to that wallet. And so even if ZKEX website was down for whatever reason, you can still access your wallet. We don't ZKEX is only one way to get to your wallet essentially, but there's lots of other ways to get to it as well. So when the user creates a wallet, they'll be told how to access their wallet without needing ZKEX essentially. So it's a self-custodial wallet that you can that lives on chain essentially. So we're not taking any asset from any user whatsoever ever. So, yes. Essentially, so this is a seedless wallet. Essentially, there's a new kind of wallet called an account abstraction wallet, which essentially it's a technical term, but what it allows you to do is it allows you to add in a lot of more usable features. So the wallet experience definitely going into 2024, the look and feel of a lot of wallets will change, and things will get a lot easier and faster and simpler. So this is one of the movements we've seen in industry, is that wallet experience is massively improved. So this is the right time to launch ZKEX, because it has that kind of really easy onboarding experience, which is more natural to users, where you can in quotes create an account and just start trading. And that this is the familiar Web2 experience that people are used to and feel comfortable with. So we are essentially mimicking it, but it's still a decentralized wallet. So when it comes to actually that wallet, you may have assets spread across different, say, networks. So let's say you have USDT or USDC stablecoins on, say, Ethereum, Polygon, or Avalanche, or some newer chains like ZK Sync or whatever. Basically, wherever your assets are sitting right now, you can use them to trade on ZKEX. So you don't need to worry about how to move your assets of different kinds across chains. No matter what chain you're on, pretty much we support all of them. No matter what chain you're on, you can come to ZKEX, connect with your wallet, and start trading. So this is where essentially we remove a massive hurdle in complexity and make it really simple to onboard users who have assets already on different chains or in different forms, in different currencies. So you want to just come to ZKEX and start trading, click, 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 and it's done. So there's no thinking about how to move my assets over, convert them, bridge them. None of that stuff exists on ZKEX. You just connect to your wallet, deposit, trade, boom. 3 steps, 2 or 3 steps, and that's it. And underlying this, like I mentioned, was the zero knowledge proof technology, which essentially secures assets at that foundational layer. So this is where the user doesn't need to secure their own assets. We do it for them, but in using zero knowledge proofs. And these zero knowledge proofs can only be created and locked and unlocked by the user themselves. So essentially, the wallet signature is part of the proof. So without the wallet signature, nobody can unlock it apart from the actual wallet owner themselves. So this is where the security element comes in. And then nobody can interfere or steal those assets once they're locked as well. Nobody can. And even the ZKEX team cannot rug anything, because there's actually nothing for us to rug. We're blind. We cannot kind of see those assets, and we cannot steal them. We can only see what's on chain, but we don't actually have any kind of secret access to whatsoever, because everything's locked. Everything's still in the custody of all the users. So this is one of the good features, we believe, where the major problems for trading right now is the complexity of moving assets across chains. And so if you just want to come to ZKEX to just buy a token, let's say you just heard about a new token called LAM token. It's going to be a hot one for 2024. But then I come to the how do I buy a LAM token? Wait, I gotta like move my assets from this chain and use this DEX and do that. Users don't care. People in crypto, we follow narratives. We want to move fast. We just want to buy and sell. Most users don't care about technology. They just want to buy and sell something because they like it. It's cool. It's funny. It's cool. It's like interesting. They want to buy that token or buy that asset. So if I heard of LAM token, but I didn't have any assets on that chain where LAM token was living, I'm inherently thinking, oh, forget about it. It's not worth it. So if we're able to break that complexity and make it really easy to buy a LAM token with any other asset on any other chain, so you can use your assets. Let's say LAM token was living on, say, Polygon. That's where the LAM token was living. All my money is in Avalanche. I can still buy LAM tokens totally fine. And I'm buying the real asset. It's a native asset, not a wrapped asset. So yeah, this is the benefit of ZKEX. This is a killer feature. One of the killer features. I'd say functionality is a killer feature, and this is a killer feature as well. Multi-chain aggregation of liquidity, essentially.
So one question related to this is that what gas fee would they pay? Would the user pay? Have to pay when they make a trade? Is it on the native chain of that asset, or what chain would it be on?
Yeah, we when a user actually settles because we're a multi-chain, when they actually settle a transaction, then since we have access to lots of different chains, then we will store the data, the record of that transaction on the cheapest chain which is available to us. So the actual trade is done on a layer 2. So essentially, this is like it's a new blockchain essentially. So the actual gas fees are taking place on the layer 2, and we subsidize that gas fee for the user actually. So there are gas fees to be paid, but we subsidize it, so the user doesn't actually see any gas fees when they're trading. They don't see it. They have the same experience as on a CEX. When they just buy a token, they just see the price of the token, they see a transaction fee, and they click buy, and that's the price you'll get when you actually do the actual trade. So we essentially absorb the gas fees. And when you essentially, if you decided to move assets back to your own personal wallet, and you want to move your asset onto Ethereum, back onto Ethereum, or back onto your, and stop using ZKEX, then you just pay some gas fees for that particular chain. But yeah, there's gas fees to pay when you deposit, when you withdraw. But after that, in the process in the middle on the trading, the user doesn't see anything. So yeah, it's because it's being done on the layer 2. Nice. So another benefit of that, by the way, is actually using zero knowledge proofs, since it allows you to make assumptions of security that assets are really there to be traded, guaranteed those assets are there. When you are actually using ZKEX, if you had, say, USDT or USDC, which is a stable coin essentially, across different blockchains, it becomes merged on ZKEX. So if I had $10 of USDT on Ethereum, 10 on Polygon, 10 on Avalanche, 10 on BNB chain, normally that's 10, 10, 10, 10, 10. But now on ZKEX it becomes 40. So now I have I can trade that 40 now, and I say, oh, I'm going to use that $40 to buy some Ethereum. But individually, if you were stuck on another DEX, you'd only have 10, 10, 10, 10, 10, and you can only buy 10 worth of Ethereum. So it would limit your access to buying assets because you have limited liquidity, personal liquidity. So this on ZKEX, it aggregates it together. So this is the killer feature as well. Just making life simple for the trader. Eliminating the technology part is really important, but you can't do it in a way which is going to introduce risk into the system. So you want to make it basically unruggable, unbreakable. And the best way we believe to do it in terms of this multi-chain aspect is using ZK proofs, where it kind of locks the liquidity. There's absolute guarantee that when you do a trade, you can be secure, that it's safe. So this over time will definitely feed into people's minds, that they hopefully will associate ZKEX as being the safest place to do trading, in the crypto world. That's what we believe. We hopefully our people's mindset will be over a while. Since we're new, people don't really have an opinion about it at the moment, but we hope that over time they'll realize that, yeah, it's the safest way to do it, without a doubt. And then we also will hope to kind of really get people's loyalty by having a really nice user interface, by having really good experience for them to go through. So they just love the comfort of using ZKEX. They have that access to lots of different tokens. It's completely secure. They have really nice functionality. So essentially, like I talked about at the very beginning, eliminating risk, eliminating compromise, no matter who you are as a trader, is our aim, essentially. So yeah.
So for this token merge, help me understand it a bit more. Yeah, if I understand correctly, then on a centralized exchange, usually I think it's a centralized exchange, right? They would gather the liquidity from somewhere. I don't know where they gather it from, probably from the market makers, right? But then I think on decentralized exchange, what we know is that if there's no in AMM, typical AMM model, if there's nobody actually putting in the liquidity, then you don't actually have anything to trade against, right?
Yeah.
So then I'm wondering here, I mean, for here, like where does the liquidity come from?
Yeah, it comes from both our users. So when the users come in and they put in a limit order, you're essentially supplying liquidity into the order book at that stage. So it comes from some users. But in addition, we also have market makers on board as well. So market makers, we encourage market makers. Several very good market makers are coming into ZKEX to essentially supply liquidity into the order book, so that because they may see an opportunity that if, for example, there's a large number of users who maybe want to buy, but not that many who want to sell. For them, that's the opportunity to come in and supply those assets and make money from selling it to them. So essentially, when you're buying and selling on the order book, you may actually be trading against another trader somewhere sitting across the world, or you may be trading against the market maker. But quite simply, you don't care. All you see is somebody else wants to take your order, whether to buy or sell. So yeah, essentially for liquidity, it comes from both the users and also from market makers. So this is again the standard way of how in the traditional financial markets you have market makers to supply liquidity in pretty much every other market out there, any asset market out there that's tradable. To make it more efficient, market makers come in and add a lot of efficiency into the order book. If you only rely on the users themselves to trade with each other, quite often there's imbalance. So the market makers are there doing something called arbitrage. When they take advantage of a mismatch in orders or mismatch of an imbalance in the market, they're there to fill the gaps and solve the efficiencies. So yeah, we encourage quite a few. I can't reveal the names, but we're talking to quite a few market makers right now. We've selected 3 who are going to come on board, and these are very, very top guys. So we hope that the pricing of ZKEX will be very, very good. The spread will be very good. Pretty much any kind of order, whether it's doing $100 or $1 million, we'll be able to handle that trade essentially. So yeah, this is our aim. The good thing here is that my co-founders and our team is actually from CEX background, so we know on a very extreme scenario what can happen with liquidity, how to manage it, how to run a very, very deep and thick order book, how to scale up our systems to have like very, very low latency when it comes to the matching of all these orders. People are very picky that if you have very slow systems, you actually lose a competitive edge when it comes to trading. So we know about all these requirements from traders of what they want. And so I think a lot of the problems that other people face in industry is that they were not exposed to the extreme scenario of when you have like extremely large orders or a massive number of users buying and selling in certain directions, and those other DEXs may not be able to handle the extreme scenarios. But I think that one of our strong points as a team is operating experience, that they know how to do this. So yeah, I think this is another benefit of ZKEX. This is something we don't really promote, shout about that much, but the people who know us know that, okay, this is like a really solid team. They actually know what they're doing when it comes to operations. And operations is everything. Operations can destroy you if you get it wrong, if you don't manage them properly. You develop a reputation very quickly that these guys are not operating their DEX very well or their exchange very well. So we've been through the extreme scenarios. I was quite confident in this area that we can not only build something, but actually manage it and operate it really well as well. And do it in a way which is still in the ethos of, decentralizing certain decision-making processes, having decentralized governance of the protocol, and having the right contributors look after the right parts of the business as well. Sorry, not the business, but of the actual protocol. But essentially, it behaves like a business, though, essentially, because you have to make money to actually run it to be self-sustaining. But essentially, you need the right people who have got really solid experience to do this. So liquidity is definitely, crypto exchanges live and die on liquidity. And when things go wrong, they go very, very wrong. And users can get very, very frustrated and worried when something doesn't happen or something gets stuck or some kind of issue. So yeah, every CEX, every DEX has different problems. So we face them all, essentially. There's almost nothing too new that we are going to be surprised with when we go live. We've been through this already.
Yeah. That's true. Yeah. So actually, I have the two other questions. I don't know if you have addressed in the later slides or not, but one is, do you just allow any listing of any assets, basically with a contract address, and people can just search for it, or do you have to go through like a listing procedure? That's one.
Yeah, we'll take the middle path. And this is one of the decisions that actually, when we decentralize our protocol fully, that the foundation or the DAO, whoever's running it, will actually make that decision. So people can actually vote. So if you had a stake in the protocol, then you can actually vote. And it will even let's say Lamb token was a hot one. And I put in a proposal into the DAO saying Lamb token is amazing, and this is why we should list it. It's a great token. People are going to love it. And then other people would vote to say, yes, it's wonderful, it's excellent, and they will get listed, essentially. So there's going to be some criteria that the DAO will follow, make sure. Is Lamb token a rug? For example, let's do some DD into this guy, Lamb, and see if he's an honest person. And, if everything came up, sweet. Then, so it's not, I think there's problems in both when something is unpermissioned, permissionless, basically. So anyone can list a token on a DEX, and then a lot of shady characters can promote their token and then shut it down, steal all the liquidity from it, and rug people. So this is where we want to avoid this. Essentially, we want to have some kind of criteria. So there's no central party limiting this, but essentially there is a governance of listing. And so, yeah, hope that answers your question there. You had another question as well, I think.
Yeah. So the second question, the more tricky one here, what I've seen in many centralized, well, not many, but a few centralized chain, maybe the bad apples, the one who actually have very thin liquidity, there's something called a manipulated attacks where you actually would see maybe in the 1 minute or 30-second candle, right? You would see a huge spike up, either green up or green or red down, right? Because they all coordinated to do the pumping and then quickly selling, pump and dump, as they call it. So how would you prevent something like that from happening, a coordinated manipulated attacks, trading?
Yeah, when the actual CEX is involved, then that's quite a serious allegation. But it has happened in the past when you have inside information. So this is where the benefits of being decentralized comes in, because everything is on chain and everything is transparent. So we can't hide from our users, and we can't hide from the market makers who also have a stake in this protocol as well. So both users are trading on ZKEX and market makers are trading as well. And so they all want to know that there's nothing untoward happening, no collusion with the actual protocol. And so I think this is where the benefits of being fully transparent comes on. So everything can be monitored, essentially. So our order book can be monitored as well. All the settlements that happen are on chain as well. So everything is transparent from that respect. So I think people can have more confidence on ZKEX compared to CEX, where CEX essentially is a black box. There may be kind of wash trading happening behind the scenes, or there may be manipulation of trades. Anything can happen. You don't know because you're not in charge. But on the DEX, it's all transparent. So at the same time, there's other kinds of problems as well. There are other kinds of risks associated with trading in general. So you do always want to have a fallback mechanism for certain kinds of trading risks. So, for example, we do use multiple oracles when we launch our perps. We'll have multiple oracles. So if there's one oracle gets hacked and they manipulate the price suddenly and something weird happens, and we have backups. We don't rely on one single oracle so the price cannot be manipulated on ZKEX. So we have different providers. We also have our own internal oracle as well as a backup to double check the pricing as well. But I think what you were talking about is also that crypto in general, because it's such a small market, people can move markets. Certain traders, whales, can move markets, and they're not really breaking a rule. They're just very influential, and so the liquidity in some markets is very low. I actually met a trader, and another friend introduced me to the trader, and the guy was like, "You should meet one of my friend who's a trader, and she's not a market maker. She's a market mover, and when she makes a move, the market moves with her, or moves against her. It's like some people have so much influence in the markets that they're trading in that they are able to move the price themselves based on and that's just trading. That's what happens in trading. So yeah, this is we want to make sure that there's no collusion, without a doubt, by making ourselves transparent, and make sure there's no manipulation of pricing or of other assets as well. So for example, one thing is that if a massive trade happens, how do you guys manage it? So I won't go into the details, but we have mechanisms in place for risk management for certain situations where if there's huge trades happening, how do we make sure that the price is not like artificially manipulated, and then only on our exchange, and if somebody attacks our exchange based on the pricing, we've got in fallbacks for all of these scenarios. So I think risk management is quite strong. Yeah.
I see. Yeah. Thanks for sharing. Cool. Is there any other slides here you want to go to?
Yeah. So the last slide was really about performance. We know that users are very, very keen to have competitive trading fees as a percentage. Certain CEXs have very high, like CEXs typically are quite high, especially the ones which are quite more retail friendly. They typically may even take several percent on your charge, but the more trader focused, the more professional type, the fees are a lot lower, because they essentially the people using those exchanges are more of the pro traders, and so they demand lower fees essentially. So there's lots of different kinds of exchange. We're going to be somewhere in the middle, I would say, where we know that the majority of trading is done by pros, but we also want to make this an enjoyable experience for retail as well. So we will be quite competitive in terms of our trading cost. And what's really important is speed, and performance is really important as well. So we have quite an optimized cost structure, and we're going to make sure that essentially the funds are all settled on chain. We have higher costs than CEX. That's a fact. CEX basically has very low cost because they're not actually settling setting trades on chain every time you do trading. It's like you're trading against the CEX, their own liquidity, and so they don't need to settle everything on chain. It's essentially lower cost for them to do this, but with us, costs are higher for sure. But over time, we believe this will go down because ZK proof technology is improving. The performance of all of this technology stack is improving as well, where I think essentially gas fees are going down, scalability is going up. So we think that in the long term, over the next 1-2 years, then costs will be quite comparable. Even right now, they're not too bad. It's not that much more expensive than a CEX, and even cheaper than some CEXs as well, and quite competitive with some other decentralized exchanges as well. So we're taking the middle ground here in terms of we're somewhere in the middle. We want to make sure that it's a sustainable operation, but at the same time, we know that pricing is really important. For you to make money on trading, sometimes it's like a very small amount of profit. If you have huge costs, it's not profitable for you anymore. So we want to make sure that it's really competitive for traders. They can make it. They can profit from their trades, and without us being a limiting factor. So yeah, it's a lot better than trading on chain directly. So since that lack of the gas fee, essentially, can be a huge amount as a percentage of the cost of trade overall. So yeah, this is our 4 competitive elements. I'll stop sharing here essentially.
Okay. Awesome. Yeah, actually, I would like to talk more, a few more questions about your company here. How many people work in your company right now? In your
Yeah,
ZKEX?
we've got a number of contributors. It's a very small team of contributors. So there's 3 co-founders. We've got about 4 or 5 developers and a couple of people in operations and community management. So currently we're only 10, and we actually don't anticipate to grow that team a lot bigger over the next few years. Around 10 is enough to run a very sustainable decentralized protocol. And actually, a lot of work will actually be given out to the community. So community involvement is really important for us, so that the community can actually have a stake and actually get paid, not paid, but rewarded, for example, for some contribution they made to the DAO. And this is done in the form of tokens, that if you go to a DAO and you do some work, then you'll be awarded, as a thank you for some token kind of reward. So yeah, this is what will be going down as well. But essentially, the core contributors, the core team's around 10, and we'll probably keep it around then.
Okay,
about that.
Yeah, makes sense. Yeah, and I think 10 people you can feed with 2 pizza, right? You probably heard of the 2 pizza rule at like Amazon or any other company. So yeah, I think that's a good size, to be honest, in my opinion, too. Make it very easy to manage, and yeah, you can still move fast and break things without too much.
Yeah, 10 people is good. We will know each other, and we'll say that quite open with each other. Decisions get made very quickly. The bigger you get, the more your cost comes, the slower you move. And I think that's also an advantage as well, that the big CXs have huge teams, hundreds, sometimes thousands of people, so they inherently have a very high cost base. But we have a similar functionality with only 10 people. So where a lot of it, because it's software, the software runs itself, is automated. We don't need to worry about certain things. We are just kind of just moving levers here and there, but essentially it's not like an entity in itself. It's software. We're tweaking the software to run more efficiently and in a more automated fashion. That's what DeFi is, actually. DeFi is supposed to be this way. That's what it is. DeFi should not have a human operator behind it. You kind of build a software and you launch it onto the blockchain, and it lives there forever. And the software always works. That's what DeFi is supposed to be. So it's essentially we are just builders of this machine, of this animal. But when the animal is out there and alive, it's on its own, essentially. So yeah, we can only tinker essentially once it's live. So we're tinkerers, basically. Yeah, maintain like a gardener, essentially, of this thing.
Yeah, cool. I like that. Typically in a small company, I actually am very curious about numbers. I'm very much like a numbers guy. Feel free to share whatever you can regarding any metrics, KPIs that you guys have. Maybe, I don't know, what total numbers of value that have been traded, or whatever metric that you guys use. Feel free to share.
Yeah, we're essentially in a private launch at the moment, so we didn't do any marketing or any promotion, and we're currently building version 3 of our product, and we're going to launch it, like I mentioned, in early next year. So the private beta launch actually attracted a lot of attention. We didn't do any marketing about it, but it actually had 72,000 people use it, and we have had over 1 million transactions. And wow, you have balloons in your room? That's amazing.
That's a lot of people. That's a lot of people. It's actually a new feature from Apple, but yeah. No, I'm just really amazed. But yeah, that's a lot of user.
Well, but I have to admit that they were all doing very small trades, because I think people right now are just testing us, because we're new. People may not trust us 100%, so they were doing small trades, less than $100. People deposit money and withdraw it, trade. They're just testing us. So the actual volume was not that high. You can say that the highest day volume we had was $1 million on one day. That was on one particular day. But since then, overall, it's a lot lower than that. So we have what happened is, when we actually did go live with the beta launch, our community grew quite a lot. So we actually currently have about 170,000 followers on Twitter. But I think a lot of the people who can't say it's community, that's not community. The community for us are the people who actually contribute towards ZKEX. The people who are like on Twitter, they're just people who are just a little bit curious about us, and maybe they just want to follow us and see what we're about to do next. So definitely the community management is a really important thing, where we can say we have a small community. Like I won't claim that we have a big audience, but a small community. We actually would do that deliberately because a lot of Web3 companies, they farm users to artificially increase their metrics, and a lot of those users are bots. And one person may control 1,000 bots, and it's a lot of the numbers are fake. And so airdrop farming and manipulation of metrics and exploiting users isn't really something that the game that we want to get into. We essentially want to build a product first that truly solves a major problem in industry. So in terms of the metrics, I think if somebody shares a metric with you, you really need to think very carefully about, did you try and incentivize this metric somehow, or are you actually doing some checking to see who's actually trading or doing something, or is it just like fake trading or wash trading? So yeah, I think with us, it's a big experiment right now. So even those users, I think a lot of users are just experimenting with us. There's no farming can happen on ZKEX. You're not going to get an airdrop if you just do nonsense trading. We'll have rewards in the future, but it will be in line with your trading activity. So if you try and farm ZKEX in the hope of getting a huge airdrop, it's not going to work. The rewards in the future for using the protocol will be decided by the DAO, and it will be in line with your trading for actual real traders. So if you're a real trader, yes, you definitely will be part of this community, and you'll be rewarded by the DAO. So trading is one of the activities that we encourage, as well as contributing towards the actual running of the protocol too. So yeah, like the numbers right now so far can seem promising, and now the market is warming up. We're a little bit excited about what's going to happen when we actually go live. So when the product is really, really solid, and actually what we are doing though, what we're farming is not people's wallets, but what we're farming is their opinions and their feedback. So we have a very strong community of people who are very proactive, borderline aggressive to tell us what to do. So like the majority of the roadmap right now, I can say 80% of it actually comes from our community. 80%, we actually went through the list of things or where these ideas came from, and they came from community members. And they said, we want this in place, and this, why you guys don't have this, and this is bad, and improve this, please. So we have a very active community, which is actually what we want, because I think we mentioned in the very beginning of this podcast about, if you build it, they'll come. So no, you have to build it to in line with what they want, essentially. So they have their problems, their issues. You build that essentially, and then they'll come. Then they'll start using it. And essentially, those users are already here, waiting to get onto the field and start playing. They're waiting for the construction to finish of the field that they have designed themselves. That we're actually just tinkering and making the field in the way exactly they want to have, so they can start playing. So we're not really to dictate to our users what they should be doing. They're telling us what to do. So yeah, in terms of metrics, we're excited. Promising start, I can say. Promising start.
Yeah, for sure. Yeah, I mean, those are very impressive numbers. I can see. What are some of the challenges facing your company at the moment?
Yeah, the big thing would be, again, small team in the early days when you're building, and then when you're operating, because certain processes are not yet automated and not yet in place. It means things are being done. Some things are being done manually. So most of us are doing double roles. So I do mostly growth and community, but I end up doing a lot of like testing. I do a lot of product feedback and stuff like that, and looking after some financial stuff. And it's not really my forte, but everyone right now is doing everything. So everyone in the team, I can say, has two roles at the moment. As we go forward, hopefully we'll automate a lot better, and we'll hopefully smooth our lives out a little bit. But everyone's working 24 hours a day. So I think burnout is a big thing right now. We've been working really hard for about a year, and yeah, we've got to get to a point where we are able to manage this. We can't go on indefinitely. Burnout amongst entrepreneurs, I think, is a really big thing as well. It's a lot of people keep building and building and building, and they don't see the success or the result of their efforts, and they get worn out. It happened early in my career. I mentioned it when I was in my 20s. I was working like crazy, not seeing the result. I essentially got mentally burnt out because I didn't have the motivation went away. So yeah, this is a big problem right now. But thankfully, we are at the end. Definitely, we're at the end of 2023. We're definitely at the tail end of our development cycle, and now we move into a new phase, essentially, of our company. So we're very excited. I can say that we move into operations. The building is essentially mostly over. Now we go into the wild, and now we essentially maintain this product now, and now we want to tell more and more people about it, and we're excited about the future, basically. Yeah. So yeah, this is a big challenge right now, is maintaining momentum, for sure. It's like a last push, essentially, for us. Yeah, that's our biggest problem right now.
Yeah. I think you mentioned a great. I would not. Well, I didn't mean to say great, but I think it's a great problem that facing a lot of startups burn out, right? So what actually motivate you and your team member, or how do you motivate your team member? I mean, and how do you motivate yourself, and how do you motivate team member every day, when they're working
Yeah,
like two or three jobs at the same time?
one very unique characteristic about our team is that we're all old. We're all in our 30s plus, all of us. Even though we all look young, actually, got to say, but we're all old. So actually, we know if we don't do this, we have to go back to the corporate world. If we didn't make this out, and that fear in itself is driving us forward. That we have to make this happen. We have a beautiful opportunity. It's a unique set of skills, experience, and people with motivation. We have to make this work. We have such a good opportunity. We have something so unique and special we want to share with the world. And there's definitely the second motivation. One is just escaping something, but also we're running towards something, which is the legacy that we actually improved our industry would be so cool. Like if we actually were one of the protocols to solve major problems in our industry and make crypto safer and more reliable and more easy to use, which is actually probably the biggest problem in crypto right now, is that it's just impossibly hard to use and it's insecure. And that's why crypto is still a niche, nerdy thing amongst young people at the moment. But we think it should be a mass market, kind of like should be essentially part of the financial industry and should be respected and should be trusted by everyone. It's not right at the moment. So we want to essentially have a legacy. Is also that, again, it comes down to getting older, that you think, okay, I want to leave a legacy of some sort. Maybe I can make my stamp, make my mark in this industry, and really be respected and well known that we actually did something really good. So that's the second part. One is a push, one is a pull, I can say. Definitely. Yeah, the motivation is still strong.
Awesome. That's good to hear. Yeah. And with a very strong team like that, and I guess you guys also already generating some revenues already, I suppose. But have your company done any fundraising yet? And if not, then do you have any plan to do fundraising?
Yeah, actually, again, since we're a very small team, we only raised a small amount of money from a few investors, and those investors are handpicked, and there's no like a we will announce our funding a little bit later, but essentially each investor essentially is almost like very personal with us, very proactive to tell us. They're very experienced in terms of to know what's happening in the trading world. They all have different skill sets. Some are very good at governance. Some are very good at marketing. Some are very good at having strong networks for us to tap into, trading communities and other things. So they all benefit us in different ways. And we'll actually have a more community round for raising sometime later as well. So that will be open to potentially anyone who's maybe really believes in ZKEX and they want to maybe invest a small amount or put in a little bit of money into so that they can have a stake in the governance of ZKEX. So then they can essentially be part of the DAO essentially and potentially vote, and then they will actually potentially get rewarded from the protocol as well. Because since if you essentially buy a stake into the protocol, you're one of the owners or one of the managers of that protocol too. You kind of work for it, so you're giving something, so will get something back from the protocol as well. So yeah, that'll be sometime next year. We're working out the details of how to get the community invested into ZKEX. So they own it, essentially. So it's a community-owned project and run by the community as well. So all of that requires a lot of really careful management. We've seen some other examples. There are some very well-run communities and some badly run ones. And what you don't want is that you have, one player who owns most of the protocol and they kind of have monopolized all the decision making. We want to make it a lot more, what's the word is it pluralistic? I can't think of the word now. When you have lots of people who have a small stake in something, so it becomes more even. The decision making is more fair, essentially, rather than having say one strong voice that controls everything. So that's how we want to set up our foundation. So yeah, we're moving towards a decentralized governance model, and definitely for the community to buy into that and to start owning the protocol is a very, very important thing. Yeah. So the traders are the ones who ideally that our ideal owner are the traders themselves. So they actually own ZKEX and they're making they'll be able to run ZKEX and manage ZKEX in line with what they want. It's a trading product essentially, so they can actually be the owners and the custodians of it in the future. So we will just hand off at that point.
Got it. Yeah, for all the listeners out there, actually, I just want to make one important disclaimer. This is not financial advice. My podcast is just educational purpose. So, yeah, I think in crypto and Web3 is inherently risky. So please do your own research, before participating. Anyway, back to my question to you, Balal. What is your take on tokenomics for your own protocol, right? Because this is one of the area where I think a lot of companies, Web3 companies, fail at, like how to make it sustainable. So I just want to hear your take on it.
Yeah, interesting. Basically, a token is a way to show your that you own a piece of that software, or own a piece of that network, or whatever it is. That's what a token really is about. I think when it comes to then you have the other side, which some people buy and sell just to where they think they might make money, or they might try and sell money. And in this area, that's the trading world essentially. So we have no interest in that. That's up to the user to decide how they want to do it. But when it comes to our own token, we don't really care about the price. What we care about is that, are we making it accessible to users to buy into ZKEX and have a voice and have the ownership of ZKEX to make it more successful in the future and more stronger in the future. So we're trying to design our tokenomics in a way that the right people get rewarded. So I think a lot of tokenomics designs at the moment are incentivizing behavior, which is very short-term thinking. So we have a view term, we are thinking like 20, 30 years over the next 20, 30 plus 50 years ahead. What's the tokenomics going to look like that far ahead? While many other projects think only 1 or 2 years. So what they do is that they encourage airdroppers to come in, artificially pump metrics, create hype in the community, then they will launch a token. And we think this is very unethical behavior, essentially, because these guys or that project was not sustainable. It was not designed in a sustainable way. It was just made in a certain way, which is essentially like a Ponzi scheme or something like that, or it was a rug. It was intended to be a short-term project. Ours, on the other hand, is that everything, the tokenomics will be designed for the community, for them to manage it properly, and so it's a community-owned project. So this is where it's the safest way. This is what crypto is all about. Crypto is all about just giving everything up and letting the community manage it. That's what crypto is all about. So the token is all about that. And I honestly have never really seen a really, really successful. There are some good examples that work in certain scenarios, but definitely tokenomics design is an ongoing art, ongoing science at the moment, where no one really knows what's going to happen in the future in certain scenarios. Like, if this was to happen, how do you prevent an attack, on your protocol? If somebody comes in and gets a flash loan and buys all your tokens, and then suddenly has complete oversight, governance, control over your protocol, and they start draining, doing this and doing that. So we are essentially eliminating all the risks from running the protocol, so that the people who come in and buy the token, they're actually true believers in ZKEX, and they want to essentially help run it. So that's what our aim is, essentially. That's how we design tokenomics. There's no kind of financial kind of like consideration behind it. It's really about having something sustainable that will last for a long time. That's what our intention is. Yeah. It's something I haven't really seen this kind of level of thinking from a lot of protocols. They think differently, I think, some cases. But this is an ongoing discussion. Like, there's a lot of people discussing about tokenomics right now. Now that we're entering, the world is suffering, being in a recession, high inflation environment where people maybe stepped away from crypto a little bit, but now there's interest in crypto again, and they realize that maybe this is a better solution to a new financial model, is the one that we actually want to be part of, rather than being controlled by the financial institutions. We actually want to own the financial institutions, and crypto is the best way to do it. So DeFi essentially is decentralized finance, right? That's what it is. So essentially, it's owned by the people. So how do we make sure that our contribution, and we try to make contribution in our industry in every way possible: security, functionality, and tokenomics. We hope that our tokenomics design will also be a very, very good one. And we want to write even research papers about it in the future as well, and show how we thought about every scenario possible and how to make sure that it's governed properly, essentially by the people who actually should be governing it, which is the traders.
Awesome. Yeah, I like your take on giving back the power and the voice to the user of the protocol. I'm actually probably gonna leave a link up here for episode 12 where I talked to Oisin Lyons. He's actually we actually talk a lot about like DAO governance and tokenomics, also various topics. But anyway,
that's awesome. I'll check that out, because it's a hot discussion in our team. So I'd love to see that too. That sounds awesome.
Sure, certainly. Anyway, so going back to Web3 discussion, I'm curious. I think you shared earlier that where you think like centralized exchange and DEX is heading, but where do you think? Yeah, in particular, just a general question. Where do you think Web3 or your domain, I guess your area would be more like trading, DEX and centralized exchange in particular, is heading in the next few years? Do you actually see that it's more like centralized exchange, the unregulated one, will be shrinking power? Is that what you've seen in the next few years? Or
without doubt. You've seen on the news, there's some really sad news. I mean, we take no kind of pleasure in seeing the misfortune that's happening in the centralized world of crypto, where a lot of people are going to jail and a lot of people are getting prosecuted. And again, these are people getting prosecuted. It's not like the protocol. Even these exchanges are being fined because of what they've done in the past. So it's sad what's happening. But what it means is there's a shift to safety, where people don't feel safe on CEXs anymore. As time goes on, our thesis has been proved again and again correct, that they are not safe inherently. They just have the image of safety, but actually behind the scenes, they're not safe. So what do people do? There's always going to be a flight to safety, of ease, of comfort. So we essentially want to be that safe harbor for people, a safe space for people to move their assets over to ZKEX and trade comfortably. So that's where we see the market moving, and our bet was correct. So yeah, in Web3 in general, I have a little bit of a bias towards like DeFi, I would say, but other areas of I'm really interested in infrastructure. Personally speaking, I read up a lot about infrastructure, because that's an enabler for you to build dApps. I think 2023 was the year of infrastructure development, where nothing really exciting happened in the crypto, but a lot of innovation will happen at the foundational layer. So now we have much better foundation to work with. So when people talk about previous cycles of mass adoption, or people coming in and leaving, I think a lot of lessons have been learned. And so people know what potentially could happen in 2024, 2025, if more and more people enter crypto and put their assets to work in the DeFi space because it offers better yield for their money or for whatever reason, then it looks like it is going to go in that direction, because inflation is coming down in a lot of parts of the world. So people have essentially can deploy their assets, want to put their assets into mechanisms that make them money. So I think the DeFi world is offering, for example, much better yields than in the real world in banking, for example. So I think there's definitely going to be a move towards into DeFi, and people will do that on the basis that it is now a lot more secure, a lot better. So I think there's still a lot of insecure protocols out there. So I think people will still, unfortunately, there'll still be some money loss, and people will lose money when they move into DeFi. But there's definitely some protocols which are very secure and have been road tested and hardened to the point of like they're almost unruggable. And I think ZKEX is one of those in that category of protocols that's pretty much almost unruggable. And so like definitely this safety and plus the comfort of better usability, the safety, the comfort level of knowing, okay, my assets are safe, this will encourage flows into the DeFi world and crypto in general. So it definitely there's positive movement. People just haven't moved into this space recently because of all the problems. So yeah, like people do it mass adoption in crypto, but it won't happen right now. It'll still take a little bit of time, but it will definitely grow. There's definitely been a huge shift. This year was momentous in terms of infrastructure, where the capacity to handle more people is there, while in previous cycles, a few thousand people caused mayhem on the blockchains where gas fees went out of control. Just a few thousand people caused complete mayhem. So like that's ridiculous. There's 7 billion people in the world. The foundation has to be really, really strong. I think we're halfway through the cycle of getting better infrastructure, L2s, and now there's a new development called L3 blockchains are coming out next year in 2024. That will exponentially increase the capacity and scalability of blockchains, and also have more customizable use cases. So, for example, if you want to build a decentralized application that focuses on privacy and is very scalable and has access to liquidity, so there's a lot more infrastructure available now for you to be able to do that. So I think infrastructure enables use cases, and then you have all this functionality, and you think, okay, what's the problem I want to solve? Am I even able to solve it? In the past, you weren't even able to solve the problems because the tools were missing. Now we have the tools, and now it's exciting what people will build. So I think 2023 was a year of infrastructure. 2024 will be the year of applications, where people will be building much higher quality applications than before. And we hope that ZKEX is one of the ones which people consider to think, oh, this is solving a core problem for users. And we hope that there'll be other protocols solving other problems that we don't take care of. So yeah, there's a lot of problems in the world. So like still a lot of potential for sure for this industry to grow a lot. Things like gaming and NFTs, I take a passing interest in, but I think overall, whenever there's interest in crypto, then people are always looking to have fun as well. This is one of the cool things about Web3 is that there's an element of fun and of playfulness. So, for example, like I have an small NFT connection, which I just bought for the fun of it, and everyone kind of gets into playing these certain kinds of games and having this kind of fun in Web3. But at the same time, the heart of Web3 is DeFi. This is what I truly believe. Other people have different opinions. They think that gaming is the heart of Web3. SocialFi is a gaming heart of game. It's not. It's really not. Those, I think, are side industries. And essentially, DeFi is the engine for Web3, without a doubt. That's where it should be. That's where the innovation should be going. And I think that's where we'll see where we are actually solving people's real problems in DeFi. Yeah, but we're not there yet. I think there's still another cycle to go through before we have some amazing, better applications than what there exists at the moment.
Yeah, and I think what you said, better application for the future and to bring on more people, which brings me to my show signature question is that what can we as Web3 builders do to enable and bring on board 1 billion people into Web3?
Oh man, that's a crazy question. I don't think it's going to happen right now because it's not one problem. It's like if you solve one problem, you found another one and another one and another one. So I gave a small indication that the infrastructure still has a way to go. I'd say we're halfway through the cycle. It improved a lot, but it still has a cycle to go. And we actually know this for sure because ZKEX is a multi-chain project. So we connect to a lot of the new L2s blockchains, a lot of the new L1s. And so we realized that even right now, with the current, slight raised interest in crypto, they're already suffering. Like some of these new L2s and L1s are already suffering with the load. So we realized that actually there has to be another cycle of exponential scalability still to come on board. People think too small when it comes to DeFi of what the potential of the number of transactions that could happen in DeFi is. So I think mass adoption will not happen on this cycle. I think this cycle that we're coming through at the moment is, by cycle I mean like 2 or 3 years.
Yeah.
This is a growth cycle for sure, but it's not a mass adoption cycle at the moment because we are still, the technology, number one, the infrastructure is not ready. Number two, the onboarding experience is not ready. So for crypto native people, it's a lot better than it was 2 years ago, a lot better, exponentially. But for the mass market, the retail users, we need to go through another exponential jump in innovation, not incremental innovation, but radical, revolutionary innovation. And we've seen it in this cycle, but that's still not good enough to where it needs to go. So I don't believe we're heading for mass adoption on this cycle. I would think we're still looking at maybe 3, 4, 5 years ahead before the technology is ready for something like that. Yeah, and it's at every level, at the user level, at the infrastructure level, everywhere needs to improve. So yeah, we're not there yet. I think if anyone sells you the idea of mass adoption right now, they don't truly understand the technology and the limits of the technology right now. They just are selling a dream, selling a hope. And so I think I think ZKEX is quite a pragmatic bunch of guys and girls. Where all the contributors here, like I mentioned, we're a little bit older. We can smell bullshit when we see it. And I think a lot of people who are new to crypto, maybe they never had a job before, and they get caught into a cycle of selling dreams and hopes, and then breaking those promises later on. So we have a different mindset where we realize that actually we are technology veterans. We worked in technology all our lives. We know that technology has limits. And right now we are definitely not mature technology. It's still very immature. So yeah, mass adoption, another 5+ years away. I might eat my words by next year, right? I'll ask you to delete this podcast or something. But no, I really think the technology needs time to catch up to the hype. The hype of, obviously, it's nice to have the excitement, but the realism sometimes is missing from a lot of people, and they're just talk nonsense. And they're talking nonsense for a reason, actually. I think it's a little bit devious of them, because maybe they're of that mindset that I just want to make some money, that kind of mentality. But maybe they're young and ruthless, and they're just talking, selling a dream in order to make money. And unfortunately, there are a lot of like weird people in Web3. But I think you have to look at those major voices in the industry that have been through other experiences in other industries, and they've experienced cycles from like multiple cycles. They've gone through boom and busts in other industries, and they realize that it's cyclical, getting better, but it's still not going to go straight up, essentially. So yeah, this is where I think the cycle is going. Yeah, this will be an really interesting year. 2024, 2025 will be very interesting, but I don't see my mother using crypto anytime soon. It has to be a lot better. She won't enter this cycle. She might enter in like maybe 3 or 4 years when you have incredibly beautiful onboarding experiences, completely seamless from the user. Like it's just like completely the user interface of the future. I think is still to be designed and yet to be imagined even as well, where technology is so seamless and so hidden from us, actually, where we don't even realize we're using Web3 technology to an extent. The user interface is so brilliant and so seamless and woven into our everyday lives. That's where I think mass adoption will come, not anytime soon.
Yeah, I completely agree. And actually, I think all of my Web3 guests, I also have guests who are not Web3 people on here, but yeah, all my Web3 guests also say that it will take time for sure. There's no like specific timeline or deadline per se, but there's a lot to improve regarding with UX, user experience for sure. Also the infra, just like you said. So there's a lot of things that we still need to be building. Yeah, and I'm also quite excited about next year, maybe 2025. I think we're starting to see a sign of a little bit of a bull market, but let's see what that will happen. There'll be more noises for sure.
I think it's good though. It definitely is based on a lot of real innovation. I can definitely say, infrastructure. There has been real amazing innovation but even this amazing innovation isn't good enough. But I think the reason for the confidence in crypto is because basic problems are being fixed. With some really low hanging fruit has been fixed. But now we know that we can go a lot further. So it's definitely a really positive sign for the industry that the last 2 years, the bear market was bad, but not that bad. The asset prices maintained themselves pretty well over the last 2 years, and now we've been seeing an improvement in the last few months, and next year will be very exciting in terms of like the asset price of, for example, Bitcoin and other things. It kind of drives interest in crypto overall. So definitely, this is why we as builders like to see the asset price go up, because it just indicates interest from people to come in and start using products which we're using. So money inflow into crypto is always a good thing. It means that the products themselves will be used more and more and more. It shows that we're actually building something that people want, and there's no way that crypto or Web3 is going away. There's no way it's happening. I was pessimistic maybe a few years ago. I thought maybe this is going to go away and it's going to die if things are not solved. But actually, those things are being solved. Like things like security. Imagine if having a 0% chance of you getting robbed, for example, things like this. Right now, you can't say it's true, but if you did have it in the future, it will just give you so much confidence to enter this into this industry. So the perception of crypto hopefully will change positively over the next 1 or 2 years as well. I think hopefully, it's less scams, less theft, less problems, more safety, more reliability. Definitely, this is the way we want to go. It will just change the image of our industry in a positive way. This is also one of the things holding us back for mass adoption, is the image is negative. This will take a little bit of time, a few years to overcome. But based on reality, that it must be safe. First off, so we as builders must build a safer Web3. I think that's fundamental and more usable and all that kind of stuff. But right now we have to be practical. It's not there yet. So that's why the image of crypto and Web3 is a little bit negative in the outside world. But that will change for sure.
I do hope so too as well, because typically I think some of the first thing people hear about, and I think this is also maybe a fault of the media, because typically they tend to report bad things, right? Bad thing happen because bad thing also catch more attention go viral, right? It's just how media works. And unfortunately, a lot of the hacks get more attention than a lot of the good things, like you guys building, for example. A lot of good things that don't get recognition, right? Because they just like so normal and like not really attention catching compared to the hacks. So it's quite unfortunate, but that's how it is at the moment, the way I see it.
The best thing is when you take technology for granted. That's the best kind of technology. It's just there. You don't think twice about it. It's always there, always on, always running. That's the best kind of technology. It's almost invisible. So just not having the mind space to worry about something is refreshing. So this is where we want to go.
Certainly. Thank you. 2 more final questions here from my side. One is, do you have any advice for people who want to build their own Web3 startup?
Without a doubt, network, like meet cool people and try to first off, try to understand who you are as a person. What are your strengths and what do you feel comfortable doing, and what kind of style do you have? So I think a lot of self introspection is really important. And I mentioned my personal journey in my 20s when I kind of like changed I didn't change my personality. Sorry, my personality changed naturally just from having an attitude of experimentation and trying new things. And I realized I liked doing these things. I don't like doing those things. So I knew myself better. And then I moved my career into that position for doing something which initially was out of my comfort zone. So, but I just learned myself better, learned about myself a lot better. And then it comes into the area where the things we're not good at, you have to find other co-founders who are good at those things. And that comes from, being a valuable person yourself. And then you find other valuable people who can complete the picture. And so I think being social and having a good network is definitely, when I'm in my 20s, I underrated it. I know people used to say that there's a phrase about the value of someone's net worth is like their network, essentially. But I was like, yeah, whatever. I thought it's about expertise and experience. That's what kind of rates your net worth, right? It's actually all the big opportunities in my life, when I look back now, happened because of networking and meeting people in the right place in the right time, keeping contact, but being also the kind of person that they want to be in contact with as well. So quite frankly, if you're like not a very interesting person, or not very useful, or not very skillful at anything, people won't want to get to know you either, because you can't really help them and they can't help you. There's no mutual kind of understanding there. So I think definitely, if somebody wants to do something as an entrepreneur, knowing yourself is really important. But when you do self introspection, you learn about your weaknesses and you think, okay, is this a defect? Can I change this about myself? If I just train myself better, learn myself better, can I become better in this? Can I get rid of this problem? Am I the problem? Is why things are not happening in my life. So I think that will unlock everything: introspection, self-improvement, changing your personality. So yeah, I was a shy nerd in my early 20s. Very bad at talking to people, didn't really know myself very well, living in my shell. And over time, you come out and you realize your value, and then you just meet people who bond with you, and you understand the value of of kinship. And like, okay, you can do this and I can do this. Wait, can we work together and do this? And then you have like the same kind of excitement, and you both, if you have two or three co-founders together, you both infuse energy into each other rather than being a drain from each other. You kind of like pump each other up, and you realize, okay, we are actually doing something worthwhile. We are actually making progress, and it just increases the amount of excitement to actually create something substantial. Yeah, so definitely this is the first step: self-introspection, self-improvement, and then things will follow for sure. Just have the mindset to meet the right people and to add value to their life, and hopefully they'll add value to your life, and you can do something work together. So I can say that our three co-founders were very different in terms of personality, but it's okay to be different. We just still kind of merge together in a really nice way. We don't step on each other's toes. We have a lot of respect for each other's domain of expertise. So I'm good at some stuff and they're good at other stuff. So I think that's the key to having a really good I think definitely having co-founders is the most important thing. Knowing how to work with them is the most important thing. Doing it alone is very, very difficult. I think I can't imagine doing something alone. It's very difficult. I think most VCs and investors, they almost have a demand that you must have at least 2 or 3 people in your team. Solo founders, I think, is quite rare to get funded. This is why and because the success rate is a lot lower. That's what it is. That person gets burned out, essentially. They have too much to do. You just can't do it. You can't scale. You can't grow that big. If you're on your own, I think it's very rare that a sole co-founder will create a massive scalable business or something like that. It's very rare. It happens, but it's very rare. There's a limit to what everyone can do, essentially. So yeah, that's the advice for any budding entrepreneur. Yeah, it's by the way, entrepreneurship is something I read about when I was younger as well. It definitely changed my life. I actually studied it in depth, massively. Like I even did it as part of my MBA as well. I actually studied entrepreneurship in depth from an academic perspective, but also then later on, you start reading about books, you read biographies of what other people did and how they did it, and it changes your mindset of, okay, I know how to manage the finances. I know how to create a balance sheet. and an income statement, and I know about how to create strategy and you pick up all these small tools, all these small things over time. Then you look at the case studies of how people did it as well, and that's it all builds up over time. So it takes a little bit of a while maybe, but yeah, maybe I could go back in time. Maybe I would have started this journey a little bit earlier than what I did. I started my journey into this in my mid-20s. I think maybe if I'd started a little bit younger, I'd be a little bit more progressed than what I am right now. But it's all good. It's part of the journey, right? So
yeah, certainly. Do you have any books about entrepreneurship? It's like a side question here, but it seems like, I mean, you read a lot, right? Obviously, so feel free to share any books that actually maybe shaped you into your character today. Yeah, that taught you a lot. Or one book that you would never forget.
oh man, you put me on the spot right now. I'm trying to think rapidly. I would say actually one of my idols, I would say when it comes to entrepreneurship, one of my idols is Richard Branson. He's from the UK as well. He came from a very middle class family.
Yeah.
And he has the attitude of like, just do it, man. Like just fucking do it. Like, you know, if you have the idea, just do it. Don't like have this self-doubt. Don't have that idea that you can't do it. Somebody, you know, we have this perception that no, I'm not capable. I'm a little bit scared. What if I mess up? And so he has this attitude of just freaking do it, man. You know, just go ahead and do it. So I love this attitude from him. So he's one of my idols, I would say. I know he's not very famous right now. He's kind of off the limelight moment. He's kind of a bit quiet, but definitely when I was growing up, he was especially in the UK as well. He's very famous. Like he has some really good businesses. So yeah, I even use some of his businesses as well, even to this day. So yeah,
Awesome.
I love his attitude. That changed me a lot. Another quote I can say, something that I still think about in the future, think about every day almost, is success in entrepreneurship and making money in life in general is when you see something, you observe something happening in the world, just be in the middle of where you see money is moving. For example, some kind of product or some kind of service. Put yourself in the middle somehow to take a cut and make yourself valuable in that supply chain or in that exchange or something like that. Put yourself in the middle. So definitely when you think about starting a business, people should think about, is there money being, you know, made or exchanged in this endeavor, or is it more like people are doing it for another reason? So I think that's I can't remember who said this, but somebody said this in the past, and it influenced me a lot to think, okay, if I do something, I have to be in the middle of something hot, something juicy. I can't be on the sides, or I can't be kind of in an industry where there's no money or no excitement happening. It's just like very flat or stagnant. You have to go to an area where it's just like hot, where money's being made, and you put yourself in the middle of it, basically. So this is that was definitely stuck with me. Yeah, this is how people make money, I think, in the world.
Yeah, certainly. Wow, very sage advice. Thank you. And
it's not mine. I picked it up from somewhere. Like
sure.
It was one of those, you know, late night YouTube sessions, and you know, your eyes are half closed and you're listening to some motivational speech or something. So yeah, it's really very but it stuck to my brain. I can't remember who said it. I gotta find out who said it, but it stuck in my brain a lot.
Okay, yeah. Awesome. And yeah, final question. Where can people follow you? Feel free to, at this point, to share any social media handles or personal website, any other site you want to share. Yeah, at this point.
Yeah, definitely.
I'll make sure link in the show notes.
Just go to zkex.com, and then we have a website. We have a Twitter there as well, and I'm very visible on all of our social media. So you can even find my personal handle as well from the ZKEX. And we have a forum, a community forum on Discord. You can join that and you can say hello there, and I'll see you there. Our team is very accessible online, so you can even like, you know, DM us and stuff. So yeah, we always listen to anything that anyone says, whether it's a comment or somebody post a feedback or something like that. So yeah, essentially, I'm available on pretty much every social network. But I would say start from zkex.com and you'll find me there. You can find me. You mentioned at the beginning, are you doxed? So yeah, my picture is all over our Twitter as well. So yeah, you definitely would recognize me and see me.
Awesome. Yeah, I'll make sure to put that in the show notes for people who want to follow you. afterward. Once again, it's been a very fascinating and in-depth discussion about DEX, central exchange, and everything Web3 here. Thank you for joining the podcast today, Bala. It's been really fun for me. Yeah.
Awesome. Thank you so much for this opportunity. And actually, one day I want to interview you because I think you also have a very fascinating story. I think you inspire me a lot. By the way, I didn't tell you this before, but you're a very fascinating person. I think I think you. I want people to know about your story. Have you ever interviewed yourself on this podcast? I think maybe not.
No, I don't think so because typically, I mean, I'm the main host, so usually, but maybe
Okay.
in the future, when I have a co-host or something,
Now we can
certainly talk about.
we can have you on another podcast and we'll learn about
Sure,
you as well. Yeah, that'd be super
certainly,
cool. Yeah.
sure,
Cool.
awesome.
Thank you so much.
Thank you so much, today.
Cheers.
Cheers.
All right. All the best. Take care.
And we're back to my studio. What do you guys think about this episode? I think it was certainly a content-dense episode with lots of info about trading, entrepreneurship, meaning of life, and various other topics. Certainly, it has been the longest episode so far in my podcast. So for the next episode, we'll dive into the world of entrepreneurship with Jokes You, a tinker, inventor, and serial entrepreneur. There won't be much about Web3, but I think you'll certainly enjoy the episode. If you like this episode, please give it a like and subscribe because it will mean a lot to me. Thank you so much for listening and see you next time.